All right, guys. Today is Friday, CPI inflation day. We got CPI inflation dropping in about an hour and 15 minutes. The NASDAQ and most other tech stocks fell yesterday and are slightly down in the day today. The NASDAQ closed at around 24,822. We're sitting at about 24.6s right now, but this is after we were over 25s yesterday. We were at 25.5s basically yesterday at the top, 25.4s at least. So we're down pretty significantly over the last 24 hours in markets. The software slump continues. A lot of software stocks breaking down. Gold and silver have corrected as well. Silver was up to the 80s, 85, 86s earlier in the last week. It is now back down to 77. Gold sitting under $5,000 an ounce as well. So gold and silvers and metals sell-off continues here today, leading into today's CPI report. And again, CPI is expected relatively low versus what we've seen over the last while. 2.5% year over year for headline CPI inflation data is what is expected today. And let me know in chat right now what you guys think we're going to get. CPI month over month expected at 0.3%. Core CPI month over month also expected at 0.3%. Year over year core, both of them are expected at 0.3 and 2.5%. So both core and headline 2.5%. Both core and headline month over month expected at 0.3%. So we'll see what that looks like. But we have CPI inflation data today, and it's a big report. Treasury Secretary Bessent is speaking right now on a couple of different things here. He said, on the U.S. deficit, I will take the market over the CBO. He said, regarding China trade, we don't want to decouple. We want to de-risk. And he said some other stuff too, but regarding the president's tariffs on metals, it is Trump's decision. He said, if anything is done, he said, spoke to U.S. trade representative this morning. We'll see if there's a narrowing regarding metals tariffs. If anything is done, it would be a clarification on incidental objects, he says. On a Warsh nominee for the Fed, he said Tillis wants to put hold on any vote, and the administration has no influence on the Pyro Fed case. And yeah, today CPI inflation data. Software stocks still slumping down here. You can see PayPal, Salesforce, and more slumped down. Some of these have rebounded though today, but software slump continues. SanDisk still green over the last 3 days or so. We can look at CrowdStrike. It's not really down that much, honestly. It dropped a little bit yesterday at the open, but not a ton. But Nvidia down to 186s. Apple all the way down to 260s. So Apple has fallen from 280s to 260s. Microsoft, which we did buy yesterday, is at $400, right around where we bought it. I'll probably just sit in this. But we're also seeing other sectors run a little bit. Home Depot has been up. And so we've seen some other stocks. Coca-Cola, which I also am in, has been moved up to $79 this year. We're actually green technically in stocks on the day. But again, CPI inflation data coming out. Coinbase releasing earnings. They're actually a little green from this here, up to 147s. But if you look at broader crypto and markets here, crypto is down relative to where it was yesterday. It's right around 67,000 today, right around 67K, leading into earnings. Leading into CPI inflation data. Does today's CPI inflation print go up higher or lower than the 2.5% expected? We're even gonna give an as expected option today. Higher, lower, as expected. Vote on that poll right now. Let me know what you guys think. Lower, good dip buys, but you know what they say, buy the first dip, get the second for free. Yeah. Yeah, is next week Nvidia earnings on the Wednesday? Yes. Or no, this is Nvidia earnings are 2 weeks from now. It's not next week. Next week is the 18th on Wednesday. That's not Nvidia earnings. Next week we have PCE data, GDP data, and the Fed minutes report on Wednesday. The week after that is Nvidia earnings on the 25th, specifically. So that is 2 Wednesdays from now. Revenue down 22%, consumer transaction volume for Coinbase. Revenue down 45%, $2.49 loss per share when analysts expected $1 profit. Yeah, that was terrible. But again, weirdly enough, Coinbase is actually green. Somebody knew something maybe ahead of it, because look at this drop yesterday. Look at this drop leading into yesterday. And then it's actually up from its earnings for Coinbase. Strange enough. Again, Bitcoin sitting exactly at 67,000. Exactly at 67K. And again, China's gold market is flashing bubble warnings according to capital economists. Or capital economics. They say China's gold surge is increasingly looking speculative, not defensive, rising leverage and heavy future trading points to bubble-like conditions, raising the risk of sharp volatility. Jewelry demand is falling, but bar, coin, and ETF buying is surging, with positions elevated on the Shanghai Futures Exchange. Treasury Secretary Bessent recently called gold trading quote-unquote unruly. The firm warns a gold bubble might be forming and turbulence could follow. Bessent on the bond market says the bond market is so tame because we're sorting the fiscal house. On the Fed, he said he predicts back near Fed's 2% inflation target by the middle of this year in 2026. And if we take a look at bond yields this morning, 10-year Treasury yields down significantly on the software slump and the tech correction here. Again, if we look at yields are down again this morning, down to 4.1%. They were at about 4.16% yesterday. If you look at it when I last, like 4.18, 4.16. They're all the way down to almost 4.1 even right now. So 4.1% for yields. Rate cut odds for March. Yesterday they were 5.9%. They're up a little bit after the big pullback and everything. More fear and uncertainty makes people want to maybe stimulate. 7.8%, although it's not very high. But today's CPI inflation report is still going to move this. Again, about 8% likelihood that we're going to cut rates next month in March. Check the heat map. We are not green today. Yeah, I mean, I never said that the market was green. I said Coinbase was weirdly enough green. If you look at the scroller at the bottom of the stream as well, it says we are red today after yesterday's big tech sell-off. So yeah, we're red. NASDAQ's down, S&P's down, Bitcoin's down. You know, here's the previous closing price up here. 44,820s. Coinbase is green though. Here's the previous closing price on Coinbase. So Coinbase green from earnings, even though they weren't good apparently. Again, but the SPY itself, the S&P, again, down pretty significantly, even relative to where it closed. Yesterday, it's down a little bit, but big pullbacks yesterday, big sell-offs. Again, inflation data. High inflation might make metals go up from uncertainty. Low inflation might actually make metals pull back some here. All right, yeah, we got about an hour left. 4 days in a row, tech is down. It's due for a bounce. Testing last Thursday's lows. I'd rather buy Robinhood over Coinbase. Where's Robinhood at this morning? It was at 70s. Yeah, it's at 72. It's looking weak as well. We're seeing some pullbacks for sure in markets right now. Can we wash this week off of us? Yeah, there's a lot of puns with wash. Software sell-off feels good similar to last April. Is the music up too much? My apologies, guys. My apologies. Red or green day today, guys. So I did a poll here. 38% think inflation shows up higher. 33% think lower. And 29% think as expected. And so most people are expecting higher inflation today. A lot of people are expecting a rally. Again, if CPI comes in hotter, yeah, so if CPI comes in hot, it might, I don't know if it's going to go makes gold or silver go up or down. CPI is hotter, actually. What is it going to do to yields? It's going to make yields go up and maybe gold prices go down, actually. Again, metals just saw a violent washout. Look at gold here. Under 5K. Silver, the big one, though. Silver down to under $80 an ounce again. Again, 2.5% is what's expected for both core and headline CPI. So both of them are expected at the same number. Gold, silver down. Yeah, well, it's nuanced regarding like the correlations with gold, right? So with gold specifically, over the long run, high inflation, people tend to hedge with gold, right? Long term. Short term reactions, though, gold is more tied to yields, and so higher inflation might make makes yields go higher because more restrictive monetary policy following high inflation, right? So that might short term negatively affect gold. But it's not a perfect correlation either. We'll have to see how it responds to it. A lot of the time, gold will also follow the market. And so depending on what the market wants, might influence gold and silver as well. So it's a little bit more nuanced in terms of the correlation with it. But again, we got about an hour here. Uglier feels, the better the buying opportunity. Yeah, again, it's I'm going to use that quote again, which is the time to buy is when blood is running in the streets, even if it's your own. I don't know if that's now. Not an investment professional. Do not copy me. I am not an investment professional. I am not liable if you lose money. Do not copy me. But yeah, we'll see what happens today. It's a big day. CPI inflation. It's kind of the main event of the week. Maybe outside of payrolls. Payrolls was big this week. CPI should be pretty freaking big as well. So again, CPI is big. Payrolls should be. Payrolls were big. Payrolls move markets on the upside, although we didn't really hold the gains here. Here's the payroll push. So originally at 8:30, you can see payrolls push the NASDAQ higher here. At the opening bell, though, we turned all the way back down, and then we kind of stabilized sideways. But again, this move is kind of small when you compare it to yesterday's big sell-off here. Look at yesterday's big sell-off. This is a big sell-off right now. So the NASDAQ turned deep red at the opening bell yesterday. I know when I was streaming, it was slightly red. It turned even deeper red after I left here. So deep red at the open yesterday, specifically in tech. Tech fell. Again, if you look at the SPY is down. You look at the Dow, a little bit less tech heavy, but it fell as well. Dow is down to 49s, under 50,000. And this is in a market that's been really bragging that the Dow is over 50. The Dow is over 50. Dow is now not over 50 anymore. Yeah, market's going to be closed Monday. Same old story, up before pre-market, down when the bell rings. Yeah, today's a little different, though. Today is a inflation data day, right? So it's all relative to what's expected and what we actually get. And so, again, if CPI inflation shows up wildly over or under the expected 0.3% on the month or 2.5% on the year, that's when we're really going to see some movement from inflation data today at 8:30. And again, we got exactly an hour right now, exactly an hour until this data releases. If it's as expected, it still might move things. We'll have to see what the actual CPI inflation report shows and what sectors, had the biggest increases or decreases to price is what we're going to look at. And again, this drops at 8:30 Eastern Standard Time. Again, looking at our poll, most people expect higher inflation today on our poll. And we can look at betting markets to see if we can find some wisdom from the crowd here. I needed to make myself some stronger coffee, but we ran out of coffee. It was one of those things where I had to make 9 cups and I only had about 7 scoops, so it's a little weak this morning. I got to drink more of it. Do they not do inflation? January inflation US, 41% think it's going to come out around expected at 0.3%. So the majority think it's going to come in as expected. There's about 30% of people think it's going to come in lower than 0.3% at 0.2%. And then 25% of people actually think it's going to come in less than or equal to 0.1%. 13% think higher than expected at 0.4% on betting odds here. But we'll see what happens. Yeah, we'll see what happens. Anything you guys looking at buying this morning here? We crashed the whole market for machines that draw memes poorly and answer questions wrong. Yeah, I mean, I understand the criticisms of AI. I really do. I use AI every day, though. So I use AI every day. It is incredibly useful for certain things. And it's only going to get better, right? And so we can isolate the things it does poorly, which again is fair. But you got to look at the things it does well. Things it does well, it writes well, summarizes well, breaks things down well, does thumbnails well, does graphic design pretty well if you find the right system. If y'all are just using ChatGPT, it's not the best at a lot of different things, right? I like others more. I use Perplexity regularly. I use Gemini regularly. Those are all pretty solid, to be honest. So you got to look at what it does well, and you got to also think about how much better it's gotten over the last 4 years, which means that, you know, again, you look at it in 5 years from now, it's going to be way better than it is today. So, and that growth is going to continue, and that's what these companies which are forward-looking are betting into. I'm not saying there's not a bubble in AI. I'm just saying we might grow into some of this money that's getting funded. Some people are saying we're at the cusp of a multi-year bear market. Maybe. Maybe. I mean, it wouldn't be first time any of that stuff's happened. What's AppLovin? Is it APLD? No, that's Applied Digital. What's the symbol for AppLovin? It's APP. Okay. Yeah, it's AppLovin has been slumping down as well. Big pullbacks. Down a really large percentage over the last 36 hours. AI is here to stay, but performance drivers fade. Morning Chef, what's up, dude? AMAT is up for the algos. Hopefully Friday the 13th treats the market well. It is Friday the 13th. Hopefully we don't get craziness in the market today. Right? Hopefully we don't get craziness. I mean, I'm gonna sit here with my popcorn if we do, but hopefully we don't. Hopefully we don't. Yeah, this should be a pretty big day, honestly, in terms of markets. Again, we have inflation data, craziness yesterday in terms of big pullbacks. You know, we're heading into a long weekend, so people might be moving positions a little bit differently versus what they normally do. And so, again, we'll see. We got the Bank of England's pill saying that trend productivity is not going back to where it was. I am more concerned about step down than step up. Productivity improvements are cyclical and mechanical. They've been speaking all morning. Treasury Secretary Bessent on crypto said important to get bill done as soon as possible on the president's desk this spring. Some clarity on the bill would give market comfort. And, yeah, it's been an interesting morning, really, here, chat. It really has. We saw news regarding oil that the U.S. is going to be sending a second carrier group to the Middle East, according to CNBC. We had Moderna earnings. They posted $2.11 loss per share. They expected $2.54, so a little bit smaller loss than expected. Revenue at $700 million versus $635 million expected here. A little bit better than expected for them. But again, the January CPI report, which was originally scheduled for Wednesday, was pushed to today because of the government shutdown. Headline is expected, again, 0.3% month over month. Core is expected at 0.3% month over month. Headline is expected to be flat month to month in terms of what it was last time. Last time it was 0.3%. Today they're expecting 0.3%. Core was 0.2% last time. They're expecting a 0.1% uptick to 0.3% today. Again, in the Fed's January statement, they upgraded its economic assessment by replacing economic activity has been expanding at a moderate pace with expanding at a solid pace. So they also said job gains have slowed this year, with job gains have remained low. and the unemployment rate has edged up. They changed it to shown some signs of stabilization. It said inflation remains somewhat elevated, relatively unchanged from its prior view that inflation has moved up since earlier in the year and remains somewhat elevated. In the press conference, Jerome Powell said inflation had made limited net progress over the past year, with core PCE showing little improvement. He said most of the overshoot stemmed from goods prices, largely driven by tariffs, specifically, which he characterized as a one-off rather than a demand-led effect. So Powell also noted that many tariff effects had already passed through the economy and expect goods and tariff-related inflation to peak around mid this year in 2026. He said inflation remains somewhat elevated, but recent outcomes have been broadly in line with expectations. He also said short-term market-based inflation expectations have fully retraced, while longer-term measures signal confidence in a return to the Fed's 2% target. He said incoming data points to clearer improvements in the outlook. And yeah, he added that confirmation that tariff effects are fading would support policy loosening. Some analysts recently highlighted Truflation's numbers, which suggest price pressures are easing better. And Pantheon Macroeconomics, however, argues that the sharp fall in Truflation's daily measure overstates disinflation, noting that it's driven largely by new rents and mortgage interest costs rather than responding quickly to market shifts. So again, we'll see what happens today, guys. We'll see what happens. Inflation data going live in less than an hour. Yeah, app is down, oil's down, gold is down, silver is down, NASDAQ is down, S&P is down today. It's deep red this morning, guys. It's deep red. It doesn't look good this morning, to be honest. Heading into inflation data, I'm not the most confident either. We'll see how it does. Again, payrolls originally made the market go up, but a lot of people are going to say, hey, we just had a delayed response to it at the opening bell. And that might be true. Again, from this, again, if you look at the NASDAQ here, here's the SPY. We can look at the SPY. Again, if you look at the SPY, we originally reacted well to payrolls. But then at the opening bell, payrolls came in at 130,000 versus 65,000 on Wednesday. Much better than expected. But then at the opening bell, we had this. Right? And so, and again, this move is very small when you compare it to yesterday. We had a big slump in markets yesterday. A big slump. Here's the S&P. Again, here's the NASDAQ, QQQ. Big slump in markets. Again, a lot of it's driven by software, but fears continue in markets right now. Yeah, I heard Rivian was doing better. Rivian's up to $17 a share. Gapping up on good earnings. The Rivian's up. And this is in a market that EVs have really slumped down to a certain extent. Yeah, so Bank of England's pill says disinflation and underlying services is flattening. And again, CPI inflation data, the market's closed Monday. The stock market is, so we're not going to have any economic data then. But, yeah. Well, CPI cause volatility. Nvidia, yeah, Nvidia's back down to the 180s. It was at 190s. Again, guys, like, look, I'm not going to say I told you so here. But if you guys remember yesterday, prior to the opening bell, the level I specifically talked about, and it's kind of an easy level to see it here on Nvidia, but if you remember, the level I specifically talked about watching was this right here. This 193.60s level. And where did we go at the opening bell yesterday? Exactly up to 193.60s, and that's what rejected us back down here. And that's a multi-week resistance level up there too. Really hard for Nvidia to get over that. It's been struggling for the last week. You can see it confirmed it 1, 2, 3 times. So we'll see if we can get over that level eventually on Nvidia. But Nvidia back down to 187s right now, 187s. The stock market is closed Monday. The bond market is closed Monday. I think futures are open with shortened hours, but the volatility is probably going to be light. So, you know. Yeah, the volatility is probably going to be light. See some people mentioning LEU, and this is slumping down pretty significantly. Dropped like 40-something% over the last couple weeks here for LEU. Not looking good. Again, Apple down as well, 260s. Alphabet, 308s. Meta, 640s. Microsoft down to 400s, although it's up a little bit over the last couple minutes. It's about flat on the day now. Yeah, yields, again, we can take a look at Treasury yields. And remember, yields and interest rates follow each other. And so post this report, if you want to see what the interest rate sentiment is from CPI when it comes out. I mean, it's pretty easy to see what the interest rate sentiment is. Higher inflation means higher yields. Lower inflation means lower yields. Lower inflation, yields and interest rates follow each other. And so lower yields means lower interest rate sentiment. Higher yields means higher interest rate sentiment. If we get lower inflation, it gives us more of a green light to cut interest rates. That's the logic here. But again, you can look at yields. We're at 4.1% this morning, 4.1%. We were at 4.17, 4.16% yesterday. So, you know, on the 11th, we were up to 4.2%. We're all the way back down to 4.1%. So yields have been falling with some of this red action we've seen in markets lately. And again, rate cut odds for March did go up slightly. They were at 6% odds of a rate cut in March. Now they're almost 8%. Vastly big earnings beats. Amazon is crazy down though. Yeah, Amazon, since their big CapEx spending freaked everybody out, Amazon's down to $200 a share. Honestly, I might buy Amazon down here though. I don't know for sure, but I'm thinking about buying Amazon just because, you know, Amazon is one of those companies which I think is going to show resilience over the years. Short term, I don't know what it's going to do. Long term, if I buy it as an investment, again, not an investment professional, but long term, if I buy it as an investment, I think resilience probably there. Just in terms of their business model, I think most of the United States and beyond are very dependent on Amazon as a retailer at this point. I know we order way too much stuff on Amazon, and maybe that can correct, but long term, I think the business model's solid. And yeah. Prediction for CPI, I'm not sure. I'll give some number, but this is one of those CPI reports where I'm really not sure. I think we could show as expected. I think we could get a shock and show lower than expected, but I think the expectations are already low here at 2.5% for CPI inflation. I think those expectations are pretty low, but I'm going to go with 2.4% today. I think I'm going to bet on 2.4%. Just a guess, might be wildly wrong. Do not copy me. I'm going to go with 2.4% today. And maybe like flat month over month. I don't know. But that's my guess. 2.4%. What's your guess for CPI inflation today, guys? Let me know. Do not copy me. I'm not an investment professional. I'm not liable if you lose. Remember, I might be terrible at all this stuff and have no idea what I'm talking about half the time. You know, 30% of the time, I'm wrong every time. Do not copy me. But let me know what your prediction is for CPI. 2.3, 2.7, 2.5, 2.9. I think higher. 2.9. 2.4. Get your mind out the gutter, Blaze. I'm going to go with 2.4% as well, maybe 2.3. Well, I already did a poll. You can vote on that one now. It's, do you think CPI shows up higher or lower than 2.5 expected? 41% think higher. Today, 41% think higher out of over 400 votes. 32% think lower. 27% think as expected. 2.1% they're going to cook the books. Expected. Is it good if CPI comes up higher? No. I mean, higher inflation is generally bad universally. It's not like payrolls where sometimes high payrolls can be bad and sometimes high payrolls can be good depending on the inflation outlook. High inflation is generally bad, all things considered. If it's too low, it can show signs of a recession though, so maybe that dynamic will be in here a little bit, but generally speaking, low inflation is good, opens the door for more rate cuts and stimulus. High inflation is bad, closes the door for rate cuts and stimulus, and it's high inflation. It's bad. Nobody wants higher prices. Inflation cannot be a lot lower. The market crashes. If it misses, the market continues to break down further today. Maybe that's what we see. Yeah, maybe that's true, BT. John invests in Amazon at low prices. Carol buys Amazon, which makes the stock go up. Yeah, maybe. Amazon is heavy. I'm not telling anybody to buy it. If I buy it, it's long term. So it means I'm going to sit on it for years, hopefully. Short term, I have no freaking idea what it's going to do. So CPI comes in higher than expected. We might as well pack up and go home, given the recent market behavior. Yeah, I mean, if it comes in shockingly high over numbers, it can definitely cause some big movements here. I think we see the biggest movements when inflation data is hot. Like we had one PPI print not that long ago that was way higher than expected. It was like 3 point something versus 2.7 or 2.6 expected. And yeah, we had some big movements from it. Again, we'll have to wait and see what the number actually shows. So. Again, inflation data coming live pretty soon here. And there's Amazon. Again, gold under 5,000. Silver with a big correction overnight as well. It's one of the big stories. Silver under $80 an ounce now. So, volatility in the gold and silver market, which is usually used as a hedge against other markets. So, again, 41% today. I think it's going to show up higher than expected. A very high CPI will officially commence 2022 2.0. It depends on how high. 2022, inflation was 9.1%. It was either 2022 or 2023. Inflation was almost 10%. And so unless we show up 5+, which is almost certainly not going to happen, it's not going to be 2022 2.0 yet. Maybe it'll start the trend, but I don't know. Truflation tracks over 50 million data points. Yeah, I mean, we can take a look at Truflation. Account here. I know I have a Truflation account, but they started doing this thing where they make you freaking log in now. I get it, but I'm also kind of mad about it. All right, so it's 0.72% is what Truflation is showing right now. 0.72%. Again, this is the Truflation count right now. 0.27 or 0.72% here. On the year, right? So I don't know, man. Seems kind of low, but maybe they're accurate. And again, is that a bad sign for the economy if we're that low? At 0.72%. Do you guys think the Truflation 0.72% number is accurate? The BLS reported rate last time was 2.7%. Showing housing. Housing's at recession incoming. It's about 3%. It's either as expected or 2.4. The market dropped before the rocket. They're setting up the bears. Still confused. Should bond yields be higher or lower? Which one is better? Do you want higher or lower interest rates? Is the question. Bond yields and interest rates follow each other. So if yields are higher, it means it means the Fed might be more restrictive. If yields are lower, it means the Fed might be more dovish or loose, you know. So yields and interest rates follow each other. So high yield signals hawkish sentiment. High inflation will make yields spike because high inflation closes the door more to rate cuts. Right, so if we have high inflation, we're less likely to ease because easing can make inflation worse, if that makes sense, in terms of bringing rates down, especially like printing. And again, low inflation can make yields go down because it opens the door for more rate cuts, for more easing, more stimulus. And so, yeah. Fake data. Hard to say if the overall market is more downward or upward pressure. It's definitely got some downward pressure over the last few days. What's your preferred AI hype company? Do you believe in the pick and shovel method or do you straight up all in on Nvidia? I mean, I prefer to diversify into the healthiest ones. I like Nvidia long term. You know, I like Microsoft, to be honest. I like Alphabet. But I prefer to diversify into the healthiest ones. Not an investment professional. All right, guys, 40 minutes left. Yeah, I'm good. Yeah, the easiest, like, if you understand the bond market, you can understand what's going on in the Federal Reserve or the sentiment regarding Fed decisions here. right? So again, if you understand the bond market, it's pretty simple correlations here. Again, bond prices and yields inverse each other. All right, so as bond prices decrease, or as bond yields increase, the value of the underlying bonds decreases because there's new bonds out that are paying better yields, right? So the value of the bond prices go down. So an example of this is like, look, today, if you look at this, and again, bond prices and yields inverse each other. So when yields go up, bond prices go down and vice versa. Again, an easy way to look at this is when you look at yields this morning, they're slightly down, which means if I look at bonds, and these are a little bit longer term bonds, the yields I'm looking at are 10-year yields. These are longer term bond prices, but you'll still probably see them up slightly on the day. Yeah. Kind of. Yeah. Again, look at yesterday as a better example of this. If you look at yesterday, what happened to markets? Yields dumped yesterday. So yields dropped from almost 4.18% yesterday morning, all the way down to 4.1% this morning. You look at bond prices did the opposite. They shot up. All right, and then the other correlation is easy. It's just yields and interest rates follow each other. So if you want to gauge interest rate sentiment on some of these reports at 8:30, like CPI inflation, payroll numbers, and more, you can watch yields. I woke up late yesterday, missed out on that dip. It was a big dip too. It's the dip that kept on dipping yesterday. If you look at the NASDAQ here, I gotta clear out some of these. But yeah, if you look at the NASDAQ here, that was a big drop. Not small. It's not a small dip here. Yeah, NASDAQ, crazy swing. Yeah, there's a lot of jokes, you know. I dip, we dip, you dip. What is it? I can't remember. It's from the 90s. Some of you guys are probably too young. But Market said, if you dip, I dip. We're not going to crash as long as yields stay high. No, it depends on what inflation data today shows up. Again, inflation data today is critical. Critical inflation data. Again, inflation data today is expected at 2.5%. Honestly, it seems kind of low to me. The inflation data today seems a little low. 2.5%. Maybe I'm just used to the last 6 months, 8 months, year really, where inflation has not been low. Again, Barclay is warning that AI sell-off gaining momentum, according to Barclays. They say that the AI-driven market sell-off could continue with investors in a sell-first, think-later mode. Analyst Emmanuel Cow notes markets are still broadly resilient, but fears of AI disruption and driving sharp sector dispersion. Traditional labels like cyclicals versus defensive matters less, and stocks are now grouped by perceived AI immunity or vulnerability. Commodities, industrials, healthcare, and consumer goods are seen as relatively AI-safe. Media, software, financial service, logistics, and commercial real estate, and parts of tech are now viewed as exposed. Selling increasingly indiscriminate despite steady earnings momentum. Barclays warns the pressure is spilling into credit markets and weighing on banks. You guys agree with that? I think we're seeing that as well. I think we're seeing a lot of people in investing are trying to gauge what AI is going to eat. Essentially, you know, software is getting hit, and it's really easy to understand why. Software is getting hit because now with AI, people can build their own softwares much easier, which means more competition for the current software companies, which means less of a need to use some of these software companies depending on what you're trying to do. And so because of that, people are getting baked into the potential outcome of less need for some of these software companies. And that's why you're seeing the software companies slump over the past few weeks, really, especially yesterday. But it's not just software, it's AI and tech. People are worried about AI and tech on the other end of that being overextended. So we're seeing, you know, corrections in a lot of AI tech names as well, specifically Amazon. The story of this past earnings season, and we're still kind of in the middle of it because in 2 weeks we have Nvidia earnings, but the story of this earnings season is high capex previously in quarters for earnings used to be seen as a positive thing. High capex with Amazon scared investors, because people are worried that we're not going to grow into that money. We're not going to grow into that spending, and that it's getting overfunded and there's less justification for it. So they're worried about corrections. You can see Amazon reported earnings here. rebounded a little bit and then dipped right back down. It's now under $200 a share. And we're seeing this in a lot of different companies in this this recent earnings season as well. Microsoft down pretty significantly here to 400s now. It was at 440s a couple weeks ago. Higher than that if you go back more. Nvidia even pulling back some, although Nvidia's been a little bit more resilient because high capex has been a positive thing for Nvidia. And so Nvidia hasn't really dropped as much as some of these other companies because people are going to need chips regardless. Is kind of the logic here. But yeah, it's been an interesting market for sure. A little scary. Again, Bitcoin and crypto have seen corrections. Obviously, if you've had your head in the sand here, Bitcoin's down to 67,000 right now, 67K here. We'll see if it holds. But went all the way down to 60s a couple days ago over last weekend. Went all the way down to 60s. Rebounded directly off of it though. And now we're back up to 67. So again, we'll see if it holds. SPY, Dow, all of them are down over the last 24 hours. There's the Dow, there's the SPY, QQQ, NASDAQ down. I'm going to go with 2.4% is my guess for inflation data. I'm going to go with 2.4%. Again, I have no idea what we're going to show up as, but I'm going to bet on 2.4% today. Again, I don't know exactly what the numbers are going to show up as in 30 minutes. I'm going to bet on I'm not going to bet on it. That's my guess. Straight up guess. Yeah, that's my guess. 2.4%. And again, you never really freaking know. It's just a coin flip here in terms of it's actually less than a coin flip, but just a straight up guess. Yeah, well, the NASDAQ is more tech heavy, right? So here's the logic of it. QQQ is the most tech heavy ETF. Has the most tech. Nvidia makes up like 8% of this, but it makes up the Mag 7, super heavy weighted in the Q. The S&P is a little bit more diversified from it, but it still holds a lot of tech. So it's down significantly. The Dow still holds some tech, although people sometimes use it as a hedge, but the Dow's down a lot as well. The Dow is only 30 stocks in the index, though. It's the Dow 30. All right, so the Dow is only 30 stocks. The NASDAQ is the top 100 stocks, and the S&P 500 is 500 stocks. So it's the most diversified in terms of how many stocks are included in the index here. But again, software stocks down. Coinbase reported earnings yesterday, and somehow it's up after really bad earnings. But I mean, Coinbase has seen a pretty big slump regardless here. So my guess is between 2.1 and 2.9%. Yeah, I think you're probably right. It's going to be somewhere in between there. Inflation at 2.3. Market will recover all losses from this week and then sell off. Gold moves first, then Bitcoin, I think. It's a rotation into productive assets. What do we need for a bullish outcome on Bitcoin? Bitcoin's probably going to want lower inflation. Why does Bitcoin want lower inflation? Bitcoin probably wants lower inflation, and I say probably because you never freaking know. But Bitcoin wants easing. Bitcoin wants rate cuts. It wants quantitative easing. It wants money printing, essentially. And what opens the door for more of that? Low inflation. If inflation's high, you can't stimulate because that's going to make inflation worse. If inflation is low, then you have more room to stimulate the economy and try to save it from economic weakness through rate cuts, through quantitative easing, money printing. And so if Bitcoin wants easing, and I've seen a little bit different movement from Bitcoin lately, though it might just be the downward trend that we've seen in it over the past months. But we'll see. Again, generally speaking, Bitcoin and crypto wants easing, and low inflation opens the door for more easing. And so we'll see what happens. But yeah. That's generally the correlation, but it can also sometimes just follow broad markets as well. But maybe that might be an argument for broad markets wanting. Again, we'll see what gold and silver do today. Gold's still under 5,000 an ounce, but it's right around it. Silver all the way down under $80 an ounce. So if Bitcoin comes in at 2%, that might wake Bitcoin up. Yeah, for sure. I mean, anything. Yeah, that might wake a lot of stuff up if Bitcoin shows up, or if CPI shows up at 2% today. That's the Fed's target is 2%. But again, I don't know, man. I don't know. I'm shorting Tesla. Their PE is 400x. Revenue is down from last year. Net income and EBITDA is down, and Elon wants to pivot away from the EV market and sell Optimus. Yeah, but could you argue that pivoting away from EVs might help raise earnings and lower PE, you know? And so I guess my point is pivoting to Optimus and AI might be better for their long-term PE ratio anyway, you know? So again, I'm not saying it is, I'm just saying that's the other argument you're going to hear from the other side, right? And again, maybe you're right, I don't know. I'm not really in the business of shorting some of the healthiest stocks in the world. I think the edge is too low. But again, maybe you're right, I don't know. All right, guys, we got 30 minutes left. 30 minutes left. People have orders stacked at 63 to 38,000. Send it. It could, but it's too early to tell. They will fall soon. Yeah, I mean, obviously a correction in AI might not be the... I don't know, man. You could argue a lot of different stuff. There's a lot of different outcomes there, you know. You get in on the pullback, maybe there's some money to be made, and maybe that's what they see. I don't know. Pivoting to Optimus long-term is a no-brainer. Yeah, I think the future of AI is going to be robotics. Not necessarily the future. I think the AI is going to be very diverse. But I think the next big money pool in markets is going to be robots, obviously. I think now that we have AI systems, I think they're going to start implanting them into lots of different types. Not even just humanoid robots, but just robots in general that solve or that do things. And I think that's going to be a big money pool in markets. And I think that's what a lot of these big companies are getting baked into as well, is that they understand that future potential. Money might flow, but will we see an AI correction ahead of that? I'm not sure. Again, silver kind of climbing back up, though. I mean, it's back up to 77s. It's still red over the last 24 hours, but... Give it 10 years, people will be confused when you mention EVs and Tesla in the same sentence. Optimus cannot do a single meaningful task. Yeah, I mean, not now. But they're betting on the future, not necessarily now. We've seen this a lot with AI. It's not really now, it's future. Somehow I'm green on stocks of the day. Honestly, part of the reason is I'm in Treasury bonds. And so not really stocks, but it's a Treasury bond ETF. So auto taxis will take over. Yeah, I mean, we'll see. Non-humanoid robots will definitely be a money pool soon, but I'm skeptical about Optimus. Elon always over promises. All right, chat. Are you bullish or bearish on this report is the real question I should ask. Put bull or bear in chat right now. We did a poll. 44% think inflation is going to show up higher than expected. 44%. We'll see if we have some wisdom of the crowd there. Again, are you bullish or bearish on this report is the question I have. Do you think markets are going up or down? We saw some big swings in markets. And again, it's Friday the 13th. We have CPI inflation dropping in less than 30 minutes. This is one of those situations where we could see some swings today if inflation gets out of control, or if markets just don't like something that they're seeing in this report. And so, yeah, just be careful. All right, looking at our chat. Bull, even, bull, bull, bull. See mostly bulls today. I see one bear. Waylo's a bear. Friday bulls. Chef is a bear. Chris Barnes is a bear. But we've got a bunch of bulls in chat today. Bullish on Bitcoin to 68K. Down, government shutdown, 3-day weekend. Yeah, but the government shutdown's a DHS. It's not really going to affect the stocks I pay attention to. You know, so it's not like the previous shutdowns where we weren't getting economic data. It was going to further confuse things. This one, you know, I'm not going to say the shutdown is good, but it's definitely less influential over things. Certified bear. Fearful bull. Gold is always up. Buy. See. Yeah, we got over 1,200 people here. We still got 25 minutes or so. Any news is good news for gold? Maybe. Maybe. Yeah, I mean, the NASDAQ, again. Here's the NASDAQ. We did have this big slump down right here. But again, markets are kind of flat, and I think markets might continue to be flat leading into this. So regarding Alibaba, which does have some stuff to do with AI, U.S. is expected to add firms, including Alibaba, to the Pentagon list of firms allegedly aiding Chinese military as soon as Friday. So look at Alibaba fall down on this news here. So Alibaba falling down on this news. Stellantis is resurrecting diesel versions of at least 7 car and passenger van models in Europe amid strategic shift away from EVs. China's Commerce Ministry says the most urgent task is to restore chip supply stability. And this is after, again, Treasury Secretary Bessent said the U.S. does not want to decouple from China. We want to de-risk, he said. Again, CPI inflation data today, guys. Market's scary too, man. Market's scary. Here's the NASDAQ. And here's the silver. Here's the SPY. Most things are red, especially over the last 24 hours. Big tech sell-off yesterday at the opening bell. You can see the SPY down here. Gold, silver down. Bitcoin down. Markets down. Yields down. All right, somebody... Yeah, I got him. Yeah, if you post the same thing over and over and over again, you're just gonna get banned. Stop acting like a child, bro. Oh no. Yeah, all good, all good. I'm on it. I'm on it. EV robots, AI, China, and John are all overrated. That hurts, bro. That hurts. You know. All right, look at the NASDAQ turn here, guys. So NASDAQ's dropping right now. Look at this, 24.6s right now in the NQ. So the NASDAQ is actually dipping down some here. Yeah, let me see if there's any news here. Again, CPI inflation data drops in 20 minutes here. So NASDAQ's coming down here. We're at the bottom of the range. I'm not saying I want to buy this. But if you look at the overall range of the day here, we're just kind of going back to the bottom. Little candle though, something in a choppy market. Again, I'm not buying this, but again, with about 22 minutes left until inflation data, we'll see what we get. All right, Murs says, I do not accept calls for Europe to write off the United States as a partner. We have understood that our freedom is threatened. We must be ready to change and sacrifice. Again, Alibaba getting added to firms that the Pentagon lists as allegedly aiding Chinese military. As soon as Friday, they think it's going to add to it. But Alibaba's down. Again, software stocks are still slumping. App loving down to 360s from almost 500 back on the 9th. So crash Friday? I don't know, man. It's Friday the 13th. CPI inflation data comes out. Markets have been correcting a little bit. Gold, silver, NASDAQ, S&P, Dow are all down over the last 24 hours. I'm not saying we're going to crash, but we might see volatility. It depends on how markets respond to inflation data. Again, Truflation has us at 0.72%, which is very low, very low. Odds of a rate cut in March are right around 10% right now. So odds of rate cuts with this weakness, I think markets are pricing in potentially lower inflation. And so again, we will see what we get, but markets are pricing in potentially lower inflation. Again, we'll see what we get. Almost 10% odds of a rate cut. Almost 10% odds of a rate cut now. So see what happens in March. My neighbor's cat told me inflation will be slightly high. Oh man, bet the house then. Bet the house. Neighbor's cat. Bears already seeing it on futures charts. Yeah, if numbers are high, we're all cooked. Yeah. Last Friday, we went up $1,200. Flying cars are pointless. Palantir. Yeah, Palantir's been slumping down too in the software corrections we've seen here. Palantir at high PE ratio. It needed to grow into this high PE ratio. Maybe it still will. But there's some swings in this thing, man. SanDisk has been making some freaking swings as well. What's up, dude? How you doing, bud? Love you, man. Have a good day, buddy. But yeah, SanDisk. Crazy prices for memory have driven SanDisk much higher here. Hit 725s a few days ago. It's all the way down to 620s again. It went down to 540s, though, a couple days ago. So this thing has been making some swings as well. Crash or dead cat bounce? I don't know. All right, guys. Hey, 18 minutes. Do we expect a bullish dollar today? Depends on what inflation shows up as. No. Yeah, it depends on what inflation shows up as. Yeah, Jack's a good kid. He really is. He's a good kid. Again, high inflation hurts the dollar's buying power. So it depends on what inflation shows up as. But short term, I mean, if we have higher odds for restrictiveness and less easing hurts the dollar, right? Money printing, especially. So it's nuanced. But it depends on what inflation shows up as. Again, here's Bitcoin. Bitcoin at 66.9. It's under 67s. 17 minutes, chat. 17 minutes. Subscribe. Hit the notification bell. We probably close positive today. A lot of people's argument is that stocks are down a lot over the last 24 hours. And maybe if inflation data isn't the worst it could be, we'll see some rebounds today. Do you guys agree with that sentiment? I don't know. Do you guys agree with that sentiment? Will inflation show optimism today, or will we push down on Friday the 13th for CPI? Slightly bullish. 3% for core and headline. Yeah, again, 2.5% expected for both headline and core. 0.3% expected for both headline and core month over month. So they're both expected. Headline and core expected at the same thing. Market cares about numbers. It cared about dollar or the payroll numbers. It's going to care about CPI as well, I think. Depends on how much over under expected, though, is. That's what it, like, most of the, I think over the last couple months, we've seen low to neutral inflation data. But none of it's been wildly over the expected. We get a wild print, it might make markets freak out. We get a low print, like super low, it might make markets freak out as well. So. V-shaped recovery again. I hope you're right, sir. I genuinely hope you're right. I definitely don't think it'll be a flat day. Big moves one way or the other. Maybe. Again, looking at our poll, 45% think we're going to have higher inflation today out of about 1,000 votes. 45% think we're going to get high inflation today. This inflation is not good. Financials are right. Let's see. Rivian. Yeah, Rivian had good earnings. Rivian EV in an EV slump. It's kind of the counter trade. Rivian up to $17 a share. It's pumping up. But again, software slump continues. Amazon getting hit heavy. I don't even know what this is. I accidentally typed in AMZ or AMN. That got hit heavy. Healthcare. But Amazon at under 198s here. At 197.5s. 197.5s. Might buy a little bit of this. Do not copy me. I am not an investment professional here. Do not copy me. Do not copy me. Time to buy is when blood is running in the streets, even if it's your own, they say. Small trade, though. Small trade. Again, look at gold, guys. Gold under 5K an ounce. Will gold go up or down from this inflation report? Thoughts on Bitcoin? I think Bitcoin wants easing, and so low inflation is better for Bitcoin. Might make it more likely we get stimulus, and Bitcoin wants stimulus. All right, guys, here we go. 15 minutes. Up, and away. Yeah, we'll see, brother. We'll see. Again, 14 minutes left. Again, we are expected today 2.5% on the year for both headline and core, 0.3% on the month for both headline and core. Next week, we do have PCE inflation and GDP dropping on Friday. So GDP and PCE inflation dropping same day on Friday next week. PCE is what's called the Personal Consumption Expenditure Index. It is what the Fed uses to gauge inflation. And even in the Fed statements, when the Fed makes rate statements during the FOMC meetings, they always reference PCE inflation over CPI. So next Friday, GDP and PCE data. I think CPI definitely has more of an influence, though. More people watch CPI than PCE, but PCE is not nothing. So we'll see what happens there as well next week. NASDAQ bullish or bearish on CPI? I have no idea. Again, I don't know what the NASDAQ is going to do. Nobody does. You got a 50-50 shot, though. What I do know is that the people that are right are going to act like a genius. Coming from somebody that had a string of like 5 or 6 CPI reports that I guessed exactly right, who then acted like a genius. You know, I get it. We'll see what happens today. My guess is 2.4% for CPI today. 2.4%. I'm guessing flat to slightly better, but again, it's just a straight up guess. I have no freaking idea what we're gonna show. We could definitely show up higher than expected today. Again, the movement that we're going to see in markets is going to be based on what the expected number is versus what we show up as. Again, expected number 2.5%. 2.5% is what's expected. We'll see what happens. What happens if inflation goes in at 2.8 or 2.9%? We dump hard? Probably, but it's hard to tell. If it's too low, markets might fear a recession. So it's really nuanced. But probably, if we show up at 2.8, 2.9%, we're probably going to get a knee-jerk reaction at the very least here, right? So again, we show up higher than expected. Knee-jerk reactions pretty freaking likely. And again, we're going to have to look at sectors with the CPI report. Again, NASDAQ back up to 24.6s. Yesterday, the NASDAQ was at 25.3s. So, again, when we're looking at CPI, the biggest things to watch at, shelter, rents, and OER are the biggest weight in CPI. It's still the main source of the stickiness in inflation is shelter inflation. Markets care about whether shelter finally gets low enough to pull core towards 2%, right? So markets care. I love you. Have a great day. Again, markets care whether shelter finally cools enough to pull core towards 2%. We want to look at core services as well. Wage-sensitive supercore buckets like medical, recreation, personal care, transportation are key to see what underlying inflation is. Core goods. A lot of talk about car prices recently. Used cars, new vehicles, household furnishings, and electronics have been disinflationary. Energy and gas, high volatile numbers are going to be relevant as well here. And we want to see what food looks like as well. But yeah. Get ready. Yeah, Bitcoin. Oof. Bitcoin's sticky lately, guys. 67,000. It is over 60,000 here, but man. Bitcoin bears been loving life the last couple months here. What will Bitcoin close the year at in 2026, guys? What do you guys think? If CPI doesn't beat across the board, the market will be down today. Yeah. Yeah, again, I think it depends. $140K, 290, 250. 40 to 50, 300, 150, 110. Yeah, we'll see, guys. We got less than 10 minutes. Less than 10 minutes for inflation data. I hope the bulls are right. I hope the bulls are right. I'm generally a Bitcoin bull, but who freaking knows? Again, rate cut odds ahead of this, 10% for March. They've been swinging the last week here, especially. I'll close around 50K 2 years until the next halving. What happens if they give CPI low, but data on shelter is blank? I mean, I don't know. Again, I don't know. I don't have a crystal ball. I genuinely have no idea. We could speculate. I'm just going to wait and see what the data shows up as in 9 minutes, guys. In 9 minutes. Again, this is after the jobs report on Wednesday showed 130,000 jobs versus 65,000 expected. I think a large majority of people think those numbers are going to get revised, essentially that they're not accurate. And CPI is from the Bureau of Labor Statistics as well, the BLS. So again, we'll see what we get here. Again, most markets are waiting for this. We'll see what we get. We'll see what we get. Gold testing 5,000 again, starting to break down here. But look at gold. Gold's now down under the VWAP, under the 200 exponential. And again, guys, we got about 2,000 here. We got about 8 minutes left. 8 minutes. 30,000 incoming. What will be gold's next movement? It depends on what inflation shows up as. I hope it falls more. I want to get a bonus next week, so I want to invest that. 150K is obscene. I don't know if 150 is obscene. 400K, 500K, that might be obscene. All right, guys, the markets are falling a little bit ahead of this report here. Hit the like. Yeah, hit the like button. Hit the subscribe button. I'm going to put it in sub-only mode here as well, chat. So hit the subscribe button. Hit the notification bell. We appreciate it. Everything we do here is free. We don't sell a course. Don't have any paywalls behind any of our content. I don't even claim to be a good trader. We just kind of cover stuff for free live every day. We just kind of cover things free live every day. Don't charge for anything. So subscribe. Hit the notification bell. We appreciate it. We got 7 minutes. 7 minutes. Again, I'm going to go with 2.4%. It's just a straight up guess. Do not copy me. I'm not an investment professional, and this is definitely not investment advice. NASDAQ getting a little green candle here. Again, January CPI is due at 8:30 Eastern Standard Time. We have 6 minutes left. A little bit over 6 minutes, but still 6-7 minutes left. I appreciate every stream since you're the first to show the data usually. Hey, thank you, brother. I appreciate it. Thank you. Sorry. I call everybody brother. Okay, yeah. I appreciate it. I appreciate it. Ladies and gentlemen, I appreciate the support. Thanks so much. You know it's going to be lower? You really don't. Honestly, you really don't. It's not predictable in that regard. I mean, Truflation has it lower, and you can say, okay, well, Truflation's generally accurate, so let's predict lower numbers. But it's not easy to predict. It really isn't. NASDAQ's starting to climb, though. We're at 24.7 right now, 24.7. Gold coming back up here a little bit ahead of this report as well. So we got some news that China and the U.S. are likely to secure several very positive outcomes, but not a grand bargain at their presidential summit in April, according to SCMP, citing the American Chamber of Commerce chairman. So we'll see what happens there. Again, 6 minutes. CPI coming very soon, guys. Very soon. All right, guys. January CPI. This is after the labor report showed strong jobs Wednesday. This is after Truflation is showing 0.72%. Today, it's expected at 2.5%. We'll see what happens. We'll see what happens. Again, headline CPI expected at 2.5% year over year. Previously, it was 2.7, I believe, right? Let me make sure. Yeah, previously, headline CPI was 2.7. Core CPI year over year is expected at 2.5 as well. Previously, it was 2.6%. Yeah, they're both core and headline month over month expected at 0.3% today, guys. 0.3%. Again, previously, headline showed up at 0.3% and core showed up at 0.2%. So, here we go. We got less than 5 minutes here. Yeah, so core CPI month over month last time showed 0.2. Yeah, give me a follow on x.com, guys, at Beginner Trades. We post all this stuff live at Beginner Trades. NASDAQ starting to climb back up. Here's the 200 exponential at 24.7s here, 24.7s. Fake numbers, by the way. A lot of people have been critical about the Bureau of Labor Statistics because what they consider fake numbers here for CPI's report. Again, a summarization of what you want to pay attention to. Shelter, rent, OER, inflation. It's the biggest weight in CPI. Still the main source of some of the stickiness that we've seen in inflation data over the past little while. Markets care about shelter inflation. They're going to wonder whether it finally cools enough to bring this down to around 2%. And again, we'll see. We'll see. Core services, wage-sensitive super core buckets like medical, recreation, personal care, some transportation. Is going to show us kind of where inflation is at, how entrenched it is. Core goods, used cars, vehicles, furnishings, electronics, disinflationary lately. We'll see if that trend continues. Energy and gas and food, always relevant if we're looking at headline data as well. And again, we got about 2.5 minutes left, chat. 2.5 minutes. My timer's a little early. Let's see what we get today. Get inflation data going live in 2.5 minutes, chat. 2.5 minutes. Too many bears this morning? I mean, I see 46% of people on our poll voting for higher than 2.5%. 32% think lower. 22% think as expected today, guys. So, again, we will see what we get today. See what we get. We got about 3 minutes, a little bit less than that. We actually have almost exactly 2 minutes now. Hit the live button next to the play button leading into this report. If you put it in 2x speed and then hit the live button, it'll be as real time as it can be. So again, put it in 2x speed, hit the live button, and it'll be as real time as it can be. Some people just get lagged behind because of their own latency, and so I'm trying to help them stay up to date. Yeah, if you're a trader, it doesn't matter if the numbers are fake or not. And I'll say it once, I'll say it again. Nobody screams manipulation more than somebody that's wildly wrong about a prediction. And so 1.5 minutes left, guys. 1.5 minutes left. Here we go. 1.5 minutes. Yeah, NASDAQ, S&P pushed up. Gold down a little bit. Bitcoin ripping this morning, leading into this report. We'll see if that trend continues. Again, Bitcoin wants easing. It wants low inflation. Here we go. We got 1 minute left exactly, guys. 1 minute. Again, guys, I don't have a crystal ball. Nobody does. I'd rather just be honest and tell you I don't know. Again, I'm guessing 2.4% is my guess for year over year. No idea what we're actually going to show up as. We'll see. Here we go. 30 seconds, guys. 30 seconds. Again, hit the live button next to the play button. Put it in 2x speed. Let's see what we get today. Again, expected at 2.5% on the year and 0.3% on the month. Here we go. 10 seconds, just about a little bit under 10 seconds, or a little bit over 10 seconds, but 10 seconds. All right, here we go. And we're going to break down the full report live. Let's see what happens here. 5, 4, 3, 2, 1. And here's the report right now. All right, watching for movement. CPI 0.2% and 2.4% on the year. 2.4% on the year for headline, 0.2% on the month for month over month headline. It was 2.4%, 2.5%. Core was as expected in both. Headline was 2.4% as expected, or a little bit better than expected. Core Headline or core showed 2.5% as expected year over year. Headline month over month again showed 0.2%, and core showed 0.3%. Again, headline 0.2%, core at 0.3% as expected here. So again, we were right about our CPI inflation print. I don't know how we do it, but I'm gonna act like a genius here. Gold pop it up, NASDAQ pop it up. Better than expected inflation data today, guys. Better than expected inflation data. We'll see if it holds. But better than expected inflation data, lower than expected or flat inflation data today here. So again, give me a second. We're going to look through this actual report and look at everything here. So give me a second. We're going to look through this actual report and take a look at everything regarding shelter and more. But again, better than expected inflation data made markets jump this morning here. All right, so let's take a look at shelter. The breakdown is this. Headline CPI again 0.2%. Shelter is up 0.2% month over month, 3% on the year. It's a clear deceleration from December's 0.4% in shelter and 3.2 year over year, showing the long lagging cooling in rents is finally bleeding through more. Again, core services up 0.4% and 2.9% on the year. Super core still remains the sticky piece with notable monthly pops in airline fares, personal care, recreation, and medical services. All right, so again, let's look through this a little bit more here. But again, lower than expected inflation data has made markets jump up some on this report. And so again, shelter up 0.2% on the month and 3% on the year, which is a deceleration from December's 0.4% increase on the month and 3.2% on the year. Grocery prices up 0.2% in food. Food away from home is up just 0.1%, and energy gas is down 3.2% month over month and 7.5% on the year, offset by still elevated utility, which is electricity up, natty gas up from, a lot of stuff, drags headline lower. Again, this print is pretty good optimistically, though. A lot of people are going to look at this as like a Goldilocks number. Headline and year over year core both stepping down with shelter cooling, but core services and 0.3% core month over month keep the Fed from declaring victory yet. But so far, so good. The NASDAQ originally went up, gold popped up, but we're starting to turn back down here from this report. Again, we are starting to turn down here on this report. Man, let's see if the market holds here, chat. But again, we showed better than expected. 2.4% on the year, 2.5% expected. Again, headline showed 0.2% on the month here. Let me put this up on screen. Again, 2.4% versus 2.5%. Month over month, 0.2% versus 0.3% expected. I'll put all of these numbers scrolling on the bottom of the screen here as well. Again, core showed 0.3% versus expected 0.3%. But better than expected inflation data, guys. What do you guys think of this? We popped up originally and we're now up slightly from it. Gold is up to over 5,000 an ounce. Bitcoin should like this number here. Look at Bitcoin. Bitcoin up to 67.4s right now. So Bitcoin should honestly like these numbers. Is it the best? We can take a look at yields to see how yields are responding to this. Again, yields are down under 4.1% right now. They might be. Yeah, so yields are falling down under 4.1% for yields. Look at yields. Again, it opens the door for more easing potential. Lower inflation opens the door for more easing. And listen, I'm not going to say I guessed the number exactly right again. I'm not going to say it, but I guessed the number exactly right again. Cheers to you guys. You're welcome here, guys. This is what we do here, Somehow we just guess it right a lot. I don't know how. CPI is the only thing I do this on. Everything else I get wildly wrong, I think. But gold, let's see if it holds $5,000 an ounce here. Do we hold? So far, we're reacting pretty well. But it's not a crazy move up. Again, shelter is the story, I think. It's up 0.2% month over month and 3% on the year, which is a de-acceleration from December's increases. So it should be good for markets, but you never know how markets are going to respond here, chat. Yeah, you never know how markets are going to respond here. Yeah, yields down. Again, look at yields fall from this. Again, generally low inflation is seen as a positive thing. Regardless, it's less like payrolls where some people want low payrolls, some people want high payrolls, depending on whether they want easing or restriction from the Fed. Generally speaking, markets like low inflation, as long as it's not crazy low. And that's why I said it's like a Goldilocks number here. Like crazy low might freak people out. But we are at 2.4% for headline, 2.5% for core today, which is getting closer to that 2% target. Getting closer. Again, is this a buy or sell right now? I'm going to end this poll, and we're going to do another poll here. Is this a buy or sell? Are you bullish or bearish on today's CPI report? Are you bullish or bearish on the day after today's lower CPI print? Again, are you bullish or bearish on the day after today's lower CPI print? Let me know. Guys, let me know. Again, we get more inflation data next week as well. Again, I'm going to do a poll here for this. You can vote on the poll. Let me know how you feel. NASDAQ's starting to come back down, though. Bitcoin's starting to fall back down a little bit as well. Yeah, housing inflation down a little bit. This just means sticky inflation overall. The job market is what it matters from my opinion. Oh, I mean, inflation and the labor market matters here. They influence each other as well. All right, guys. So we did see an uptick in volume from this. Again, vote on the poll. So far, 64% are now bullish on the day. And again, we're not really up enough for me to be super confident in the bullish direction here. It does look like a bull flag. But again, you never freaking know. Gold is up, though. Silver up more, I would say, than gold is. Look at silver pop up to almost $79 an ounce right now for silver. So silver's making a move up. Again, lower than expected headline and headline data. Headline was lower than expected month over month and year over year. 2.4% on the year, 0.2% on the month. Yeah, CPI is out. It came out at 8:30 Eastern Standard Time. Came in at 2.4%. As I expected. A little bit lower than the actual expected numbers. Make me a freaking analyst out here, dude. Come on now. Analysts had it at 2.5. I said 2.4. It showed up at 2.4. That's all I'm saying. You'll never hear the end of this. Again, 24/750s here. 24/750s. I'm not excited because the market's going up. I'm excited I got it right again. You know, ego overpowers what I care about the stock market. You know, looking weak. It's honestly not going up that much. Gold and silver are up though. Gold and silver are up. Yeah, well, yields are going to be going down because this opens the door for more rate cuts, right? So here's yields right now. So yields are down to 4.08% for yields. Again, this is after yesterday's slumping and markets dropped yields even more. But look at yields drop. So yields down to actually about 4.07% right now. So yields are tumbling down some here on this report. And it makes sense, right? Like lower inflation opens the door for more rate cuts, earlier cuts. So we are seeing yields go down. No more Poly market, now Johnny market. Don't copy me, though. You copy me, I send it back. Yeah, we'll see what happens. Chat, we'll see what happens at the opening bell. Yeah, appreciate the follow on x.com at beginner trades. Again, we cover all this stuff live. We cover payrolls faster than everybody else. You're welcome. And, yeah, we'll see if yields hold. Again, markets are not up as much as they could be. I think markets are optimistic, but a lot of this data, here's the reality of it. Shelter was a little bit better, which is good. A lot of it was kind of flat. Core was completely flat. And so it's all relative to how big over or under the numbers are. And this was pretty flat data, realistically. So NASDAQ is up slightly. Silver's back up some. Gold's back up some. Bitcoin was up some ahead of it, but it's now falling back down if you look at it here. Yeah, pretty flat. CPI is kind of meaningless. Yeah, it's kind of flat. In-game stagflation, recession. I don't know, man. Stagflation, again, if you don't understand what stagflation is a what did I just say? No. Is a historical situation in which we have high inflation and weak labor simultaneously. right? It can sometimes precede a recession. Whether you think this is stagflation, I don't know, man. 2.4% is not shockingly high. I get it, their target is 2%. But again, that's their target. If I want to make $1 billion and I make 800 million, I'm pretty content with that. 800 million is not bad. You know, and I think you have to look at inflation the same way. Sure, their target is 2%. But 2.4% is not bad. I wouldn't say it's crazy high inflation. And I know we have some people here, and I'm going to explain this again. I know we have some people here and they're like looking around and they're like, bro, we have such high inflation right now. And I understand why you might believe that. And I'm not even saying you're wrong. But a lot of the prices we're dealing with now are prices that we're stuck with from 2020, 2021, 2022. You know, supply chain problems, lockdowns, stimulus checks, quantitative easing, money printing, low interest rate environment. All of that stuff caused inflation to spike by 2022, 2023 to almost 10%. And inflation doesn't really go down, it slows down. And so again, inflation, prices are not literally going to drop unless we're talking about food and energy. And even those have been difficult lately as well. But again, once prices go up like this is why inflation can be so damaging, is that once prices go up like this, again, here's 2022 inflation. Once prices go up like this, we're stuck with them. You know, we just want slowdowns. We want a couple years of stability. And again, this is where we are now, right around here. So again, 2.4% is not bad in terms of the current inflation rate. But a lot of the high prices people are dealing with now is just from, you know, prices that we're ultimately stuck with, a lot of them at least. Stagflation. Are we in a stagflation environment right now, chat? Let me know. I mean, I think weak labor is definitely more arguable than super high inflation currently. Despite the labor numbers from the BLS on Wednesday that showed 130,000, which is way better than expected. It's still not a great number. It's not a terrible number either at 130K. Like super hot jobs would be 250 or whatever. But I think a lot of the other data, especially ADP unofficial data, has showed a lot of weakness in jobs. You know, JOLTS was lower than expected. Jobless claims were higher than expected. You know, the other question mark is ISM PMI data, the Purchasing Managers Index, showed a lot of strength lately as well. So we kind of have contradictory numbers in a lot of different ways right now. If the NASDAQ can get over 24,820s here, it'll technically be green on the day. Yeah, we're stuck with them. Prices really come down. Yeah, silver's up, gold's up. I'm trying to see if Bitcoin's going to bounce back too here. A lot of this looks like a flag, but we'll see. 67.2s for Bitcoin. I'd argue that 2020 was an entirely different scenario and shouldn't be tied into anything currently. Yeah, but again, you got to understand. Again, okay, the Federal Reserve, their job is to maintain balance. When stuff hit the fan in 2020, lockdowns, problems, obviously heading towards a deep recession if the Fed didn't step in and do something. So the Fed brought rates down to almost zero to stimulate the economy, because cheaper interest rates means businesses can expand and hire more people and have everybody has access to cheaper leverage. They generally spend more. This stimulates the economy. But the Fed also did a really desperate thing called quantitative easing that they generally only see. Again, it's more dire to do quantitative easing. It's where they create online money and then use that online money to buy up bonds and expand their balance sheet through asset purchases. This can help bring interest rates down and stimulate the economy more, but it also can spike inflation in a much more profound way. And not just that, again, the stimulus checks definitely caused inflation. Supply chain issues, like it was hard to buy things during that period of time because of all the stuff going on, that caused inflation. And again, once inflation goes up, you're kind of stuck with it. And so I definitely think it's all relevant to now, right? Like a lot of people are still not used to paying the prices they are now, because pre-2020, they were paying way lower prices for a lot of different things. And, but again, the only time prices literally go down is when we have deep recessions. 2008 is right here. And even then prices didn't really stay down. And so, again, I think the best we could hope for is stability. And maybe we're kind of seeing some of that now. But yeah, that's basically the story of it. Yeah, no, 100% dead eye. You're very correct as well. It was those loans. Those loans they were given to everybody, bro. Regardless of your business. If you had any business, they'd give you one at the time. It will get worse and more pricey. I'll see. All right, guys. Again, we'll see what we get. We'll see what we get, but if you look at actual money flow inflation, 6%. It's nowhere near 2%. Well, sure. Again, the real numbers are always a little bit different. Same thing with jobs. You know, same thing with jobs. Same thing with the unemployment rate. You look at like what is it? The U6 unemployment rate. It's so much higher than the actual official data. So, and again, Kevin Warsh is the new nominee. We'll see if he actually gets put in place though. But the new nominee is Warsh. Warsh. And I don't necessarily disagree with Warsh. Warsh, I think, is going to be more likely to cut interest rates, but less likely to print. Which is probably the right move if you fear inflation. You know, basic 25 basis point rate cuts are not going to really spike inflation like people think. It's the money printing that screws us up in inflation. And people think Warsh is this big hawk, like restrictive pushing guy. But again, his stance has been a little bit more nuanced in regards to he's less willing to commit to quantitative easing, which is money printing. And so I think he might lower rates but not print. And I think that's probably an okay thing. Again, I don't know for sure. NASDAQ starting to tumble back down here. So is silver. Here's gold. Again, gold over 5,000 per second here. Let's see if gold holds 5K. Gold is right at $5,000 an ounce. Friday the 13th playlist? Yeah, I'm trying. These questions are, do these figures really reflect reality? Yeah, I mean, it is the BLS, guys. Like I said, BLS data. A lot of people think the BLS jobs data is going to get revised. CPI data gets revised less, though. So. And again, I think you have to understand also, like, in a weakening labor market, it might naturally bring price pressure down some. So, that might have something to do with it as well. Basically, even if we have low inflation right now, it might not be good. But, again, we'll see. We'll see, chat. So bias? I'm definitely biased. Market really doesn't care about CPI. There are much bigger immediate issues. Yeah, I mean, we've seen some big pullbacks yesterday. And so we'll see if those pullbacks continue today. Look at gold come back down under. Gold is back under 5K an ounce. Again, Bitcoin's starting to fall back and give some of its gains back as well here. Here's Bitcoin. Do you believe this data? All right, we get a lot of, we're seeing a lot of back and forth from people. Do you guys believe this data here? Is this data legit? Do you believe the 2.4% number here? Again, the food away from home index rose 4% over the last year. Full service meals rose 4.7%. Index for shelter rose 0.2%, was the largest factor in all items in the monthly increase. The food index increased 0.2. So let's see. No. Never believe it. 100% no. Truflation also got it lower. Doesn't matter what we believe. Wait until the market opens. Yeah, maybe we'll see some corrections at the market open. That's something that we have seen a lot of recently. Again, look at SanDisk. SanDisk is starting to tumble here. Not a lot. It makes big moves already. Bitcoin just bounced a little bit though. No, not legit at all. Goldilocks data. Lies, all lies. Yeah, maybe. Yeah, look at SanDisk. NASDAQ's starting to head back up, though. We might go green on the day if we keep pushing up here. Gold's starting to bounce as well, back over 5,000 an ounce. What did I buy this morning? I bought something. I bought Amazon. Amazon bounced. That's good. Look at Micron. Yeah, the dollar index again here, chat. It did react negatively, this report. All right, it didn't react negatively. It just moved. I guess it did react negatively. A lot of this move happened right before the date. Oh, no, this was 7:30. Okay, yeah. So it did react negatively on the Dixie to the more easing potential, maybe. Intel's nicely priced. Anything you guys want to buy today? Again, I asked people, are you bullish or bearish on the day after today's low CPI print? 64% bullish. USAR, Silver, Amazon, there are issues that CPI goodness can't fix. Astera Labs, UiPath, Dell. Quick recap for new joiners. Okay, so inflation data came out today for January. It showed mostly lower than expected for headline data. Headline data showed lower than expected. Core data was completely flat, but it was slightly lower at 2.4%. 2.5% expected year over year, 0.2% on the month, 0.3% expected. So slightly lower by 0.1% for both month over month and year over year headline CPI inflation. Now, this comes after Wednesday's labor report showed stronger jobs than expected at 130,000. Markets have had a big pullback specifically in tech and software yesterday. And it's been a season in which during the opening bell, we've seen high volatility. And we are going to day trade live at the opening bell. But during the opening bell recently, we've seen high volatility. And so, yeah, we'll see what happens today. We'll see if the market volatility wakes up again at the opening bell. But that is something that we've seen. If you look at markets yesterday, we are up a little bit on this report. But if you look at the markets yesterday, yesterday's opening bell was volatile. Big drops in the NASDAQ, gold, silver, Bitcoin. A lot of stuff dropped big yesterday. Again, the story of these drops is AI fears as well as software slump, right? People are worried AI is going to eat software companies' margins, and they're also worried about overvaluations of AI and tech in general. And so we're seeing a lot of tech and software companies drop, and that's what caused the drops yesterday. Tech and software fears, overvaluation fears, overextension fears. But again, we'll see if the market wakes up at the opening bell today again. They want to put a data center in my town. People are mad. When's Chinese New Year? Isn't it March? Might be wrong. Sorry. The fear extends to most tech names, I would say. Tech and software. Data centers, Nvidia and like TSM, and we look at like Alphabet, TSM, Nvidia have had pullbacks, but it's not as profound as some of the other names, right? But yeah. Oh, it's next week? Okay, my bad. Yeah. Yeah, we'll see what happens, guys. We'll see what happens. Again, Amazon back up. I did buy the dip in Amazon. We are green on that now. That's nice. I'm actually green in stocks this morning. Pretty red yesterday, though, so I think I don't think it compensates for yesterday's red action, but hey. Again, inflation data year over year, 2.4, expected 2.5. We know that, dude. That's what we keep telling poor John here, and he ain't trying to hear it. It's not that I'm not trying to hear it. It's that I'm trading this data. I'm basing it off of what the data is. We can say the data is not accurate, and again, I understand that. But I'm just reporting the data here, sir. You know? And so I'm going to report the data as the data is. Again, whether the data is accurate is up to y'all's interpretation. You know, I'm just covering news, sir. I'm just covering news. You might not like the news, but that's what I'm covering, you know? Sorry, brother. It's all love. We can agree to disagree, you know? I'm not even saying the data is accurate. I know a lot of the BLS data is not accurate. So, yeah. I'm not even arguing with y'all, to be honest. Yeah, don't get mad at the messenger. It's all right. Listen, top 3 messengers ever, though. Of course I'm going to celebrate it. I got 2.4% right. Again, y'all will never hear the end of it. I'm not even saying it's accurate, though. Honestly, I think that the fact that I can predict what the inflation data is going to show up as means it's probably not accurate, because that makes it too predictable. You know? Like, kind of like what they want it to be versus what it actually is, if that makes sense, right? Again, that's my take on it, if like my honest take. Again, I also have skepticism regarding the BLS data in the first place, considering I cover all of it every single time, and I see how much not only the jobs reports get revised, but also how much it changes. So, I'm not even mad. Keep reporting the news. This is the top 3 best morning show ever. John is compromised. In what way am I compromised? Long or short today, guys? Long or short? Let me know. Yeah, my wife told me not to get her anything for Valentine's Day. The question I have, this is definitely a trap, right? Like, if I don't get her something, she's going to be like, you know? I mean, I got her something anyway, but still. Long, short, long, short. All right, kind of longs and shorts are split down the middle. Yeah, you guys know. I know, too. Not my first rodeo here. I get it, you know? Yeah. All right, guys. Again, Nvidia 188. Gold. Is it still back over 5K? Yeah, gold right around $5,000 an ounce here. And we got about 30 minutes until the opening bell. Oh, I'm definitely biased in all stages of life. I mean, humans are naturally. It's impossible to be perfectly objective. You know, coming from the most objective person ever. I mean, I get it, guys. I get it. But I'm definitely biased. Taking it from a woman is definitely a trap. I know. I already know. You know. Did I get a cigar? Bro, if I started smoking in my office, like cigars in my office, my whole house would hate me, dude. Again, tobacco and smoking products jumped 2.1%, the biggest rise since 2017. While at-home alcohol sales fell 0.4% in the CPI report, the sharpest drop since 2019. I don't know how I just saw this news story and it lined right up with the cigar comment. But we're in a simulation, I guess. But again, smoking is up, drinking is down apparently. Tobacco and smoking products are up 2.1%, the biggest rise since 2017. At-home alcohol fell 0.4%, the biggest drop since 2019. All right, so Goldman Sachs CEO says we have a chance for the next couple of years to run at a higher base growth rate. All right, guys, 30 minutes. Again, where's Baba up on this news? Baba getting hit after it's getting added to a list of firms that aided China. It's at 153s right now. It got slumped a little bit, though. The question is, does this drop for Baba continue down? Look at Baba down to 154 as of now, guys. Are the BLS numbers going to be more accurate with the new chairman? There's been questions about whether they'll put him in right now. Like, the president and the Fed have beef right now. They've got problems. The president went after Jerome Powell regarding comments he made about the federal, regarding what he said was overspending on the Fed building budget. That he also said Powell understated, essentially, is what he said. Because of this, Powell, even in the last FOMC meeting, was very reluctant to talk about anything besides the base numbers. Didn't want to give an outlook, was very quiet about other things. Didn't comment on other things like he normally does sometimes. Just stuck to the script, basically, for Jerome Powell. I can't even blame Powell for being that way. I don't know if the lawsuit, or the subpoena, I should say, or the charges have much weight. But again, that is kind of making it a little different. I don't even see, usually Jerome Powell does something called the semi-annual monetary policy report to Congress, where he gets basically grilled by the House and Senate for a couple days. I don't even see the schedule for that. Usually it's in February. But again, I don't see the schedule for that. Maybe it's going to be in March this year. But yeah. And I don't know if they're going to necessarily put Warsh in there right now because of those disagreements. I think they're going to have to sit by the fire and sing Kumbaya before either one of them is going to be willing to work with, the other one. Inflation down a little bit for sure. Another bull trap set. You think Palantir will rebound? What time frame are we talking about? I think long-term Palantir is probably a good company. I think PE ratio... Excuse me. I think the PE ratio is high. It's a little bit better now that it corrected back down, but the PE ratio, the price to earnings ratio for Palantir has been high. So usually if it's too obvious, it's a trap. How can people smoke cigs with knowing what we know? Honestly, it's a tough addiction. Like, I smoked when I was younger. That's a tough addiction. Even now, like, I quit years and years ago, but if I go around somebody smoking one and I smell it, it's a nasty addiction. Nasty addiction, man. I know vapes are cool right now. I never really got into them, so I think I got lucky in that regard where, like, I don't really vape, and so it helped me quit. But still. I think institutions use these good reports to gauge retail strength and gouge the market. Yeah. I think, let's talk app. Yeah. Amazon almost green on the day, popping up here. Again, we got 25 minutes left until the market opens. Here's the app right here. App at 370s. So app pushing up a little bit at 370s right now. Let's see if it holds. Again, NASDAQ at 24.8. So NASDAQ up on the day as well. If NASDAQ gets over this light blue line, it's technically green on the day. Yeah, I'm not on any nicotine. I don't really... Like, I've had moments of weakness. Honestly, usually it's when I'm, having a drink or two and people around me are doing it. But I always end up just feeling bad about it. Like, it never pulls me back in. I'm always just kind of like, ugh, that was gross. And then I don't even worry about it, But it's tough. It's tough. All right, guys. NASDAQ just rejected right at the previous closing price at 24.8. 24.8. You scared of a bull trap? Yeah, I mean, I don't know if we're up enough for a bull trap. Maybe. I think this previous closing price is running into like some resistance here. Again, let's watch Nvidia here. Nvidia up to 188s. This level kept rejecting at 193.60s, right under 194s. Again, Treasuries jumped and investors priced in higher expectations that the Fed will lower interest rates at least 3 times this year. Yields went down. Although they're not where they were here, but they're still down. It looks like they did bounce a little bit. Yeah, so they were down to almost 4.07. They're at 4.09 almost right now for yields. So again, yields are net down. Again, showing lower interest rate sentiment. More likely the Fed will cut rates, this year. Again, let's take a look at the rate cut odds here. I'm curious to see if these went up for next month because of the low inflation print. Still about 10%. We'll see if this changes. Still about 10% odds of rate cuts in March next month, so not very high probability. That's the biggest reports as well. I don't know when. I think it's in exactly a month for the March decision here. So, we will probably get another payroll report before we do rates. We might also get another CPI report. I think the rate decision's on the 15th or the 16th. Let me see. Next month in March. Yeah, March 17th or 18th. So we'll get another CPI report and another payroll report before the rate decision in March. The problem is that it's going to be so close to the rate decision, they're probably not going to use that data too much to gauge what to do. So again, next week we do have the FOMC minutes report as well. Yeah, I didn't see odds change much. Sometimes it takes a little while for these to get priced in. You can look at yields and see that we are down on yields from this report, so maybe that'll get priced into the Fed rate odds. What's at 1 Eastern time today? It's not the Fed minutes report. Oh, the bond auction? Yeah, I saw that. What is it? Is it 30-year bond auction? Oh, I don't see a bond auction. Yeah, Netflix. I'm in Netflix as well right now. But I think I took profit when it was at like 86s a couple days ago. So it's small. DLT puts. Oh, from the bond auction. Yeah. Weekly unemployment were to tank, the rate cut odds will spike though. Yeah, I mean, weekly unemployment claims yesterday showed up at 227, higher than expected. Although they were lower than the previous number at 232, but 232 was pretty freaking high the week before. So it's hard not to do lower than that. But again, look at the NASDAQ turn back down here. Here's the 200 EMA. I might actually buy this a little bit. How much time we have? We got a couple minutes. I wouldn't do this at the opening bell, but we'll play this a little bit here and see if we bounce at the 200 exponential right here. So we lost money yesterday, but we'll see if we can get a little pop up here to at least 750. What I'm looking for. Very small green trade. I'll add maybe 4 contracts here. Let it hit the 200 and then happens. Again, I'm wondering. The biggest thing I'm worried about is a delayed response to some of this stuff at the open. Like the last few days, we've seen volatile opens. So I am a little worried about delayed responses to this. But I like the 200 EMA. I got to play it. And it's made me a lot of money. So even if we lose, we got to be okay with it. I'm going to start cutting some of this. Yeah, I don't like it. Once we broke under that 200 EMA right there, a little too scary for me. Although because the only other bounce level I see maybe here is sevens, like 715 right here, and that's just too deep to hold it. We've been doing okay day trading some stocks though, honestly. See if we can have some good action there day trading stocks. Stock market closed Monday. Good job, sent it sinking. Cisco is buying out a restaurant depot. Means it means Cisco with a C. Oh, you're talking about SYSCO, different company. I don't know anything about them. Yeah, I don't know much about them. DraftKings, the logic of DraftKings drop here. I used to love DraftKings as a stock. The problem with DraftKings is easy. Prediction markets is going to eat its margins. It's going to eat its money. Why? Because people don't need to go to DraftKings to do it anymore. They can go to prediction markets. So that's going to eat their business a little bit, at least. And that's the logic of why DraftKings has had such a tough time. Because prediction markets are being a thing. And so DraftKings has not had a good time the last little bit. It was at 40s, 50s. It's now at 22s. Like, that's what's going on with DraftKings, is that prediction markets are disrupting that industry. So that's the issue with DraftKings. Again, prediction markets specifically. Yeah, and you can see DraftKings just had a really tough time. Yeah, I mean, I'm not saying people are going to make money. I'm just saying people are going to gamble in other means now versus what they used to. So. Again, we did get a push up to 750. I did get into a little trade here, so I'm actually green on the day now, but I don't trust it. Maybe if we pull back to the 200 EMA, I'll try another trade here, but we'll see. Like, we had a pretty good run the last few days. Like, this is my trend. Day trading the last week here. So, last 1, 2, 3, 4, 5, 6 days. So we had a red day yesterday for the first time in a week or two. But not a bad little graph here over the last week. So I want to buy this dip here, though. It is Friday the 13th today as well, guys. I don't know how much volatility that's going to bring. But it is Friday the 13th. Are you still in Oracle? I can't really remember here. Yeah, I'm in another trade here. I'll show you guys this. I already took some profit though. Yeah, so we made a little bit more here, but small little trade. I did buy the dip. Am I still in Oracle? Yes, small, very small. Average price 166, but it was a much larger position and I took profit off of it already. So I don't know if I'm red or green net from it. I have to check, but I am still in it small. CPI data's out. You can see the bottom. What skill or habit do you attribute to trading success? Poker. I was a poker player before I traded. I love poker. Poker very similar to trading in that regard as well. Poker, you calculate pot odds. You have to wait for good hands. Like, very similar, to be honest. Variance is real. You got to understand, like, short term, you might have specific outcomes that don't necessarily match edge, but long term, if you're a good plus EV player, you're going to make money. Same thing with trading, very similar in that regard. It'll condition you to kind of be patient and wait as well. But I'm not even claiming to be a great trader. Yeah. Apple will be the beneficiary of this Claude bot shenanigans. Everybody's buying Mac Minis to run it. Poker, I play the man. Well, you play your hand. You know. And you can play the man too. It depends on which. I mean, everybody's strategy should involve a little bit of both, realistically. I don't claim to be good at anything. Look, I'm bad at jiu-jitsu, I'm bad at trading, and I'm bad at poker. That's all I'm saying. I mean, CPI news has made some difference. It's just not a crazy difference. Again, it's all relative to what's expected for inflation data. So if inflation data shows up flat, as it kind of did today, showed up slightly lower, but essentially flat. Then we're, you know, that's the expectation is what's baked into the market already. And so now we might continue the trend of yesterday where we've had deep pullbacks in markets. That's very possible. You do brag a little? Of course I do. I mean, look, most of the time it's sarcastic. I don't know if people understand my humor in that way. If y'all really think I believe that I'm the top 3 greatest in everything I claim to be, no. Maybe I am. But no, it's all, half of it's sarcastic. Steve the Bear? He's happy the last few days. Look, here's Steve right here. There's Steve. Steve stared at me this whole time. I don't know how to feel about him. There he is. You know. Let's see what Steve got to say at the opening bell today. 2.4%. Would this add a cut rates? Maybe. Yeah, honestly, the Nasdaq's kind of flat right now. Again, we'll see if we like unlock volatility at the open. The last couple weeks here, what we've seen is we've seen data come out, and then the market at the opening bell delayed, like kind of laggingly reacts to it at the open. Yesterday, we saw jobless claims show up higher than expected. I'm not blaming that on the drop. I'm not blaming the drop on that yesterday. I think it could be a lot of different things. Payrolls Wednesday was the same way. So we'll see what we get at the opening bell today in 12 minutes. It should be volatile. But it is Friday. It's Friday the 13th. Yesterday, we've seen big pullbacks. A lot of people are betting on bullish action at the opening bell. I saw a lot of people, especially pre-CPI, bet on bullishness at the open and on the day in general. I don't know. I really don't know. I think we're somewhere in the middle now. Again, bull or bear at the open? Let me know. Bar said they should have cut. Bitcoin here. Bitcoin at 67.3. So Bitcoin's trying to get up here. 7.3s. Bull 100%. Big bear. Yeah, it's trying. All right, I'm slightly green on the day. We'll see if it continues. SanDisk started to bounce back as well. Again, I bought Amazon earlier in the day. I am green on that as well, which is nice. But last few days have been kind of red. I need Nvidia to go up bad. Nvidia's trying, man. It has a hard time staying over 190. So Nvidia's honestly been in a pretty tight range. Look at this. Since July. Nvidia's basically where it was at the end of July 2025. So Nvidia's been in a tight range for a while now. Has a hard time staying over 90s. Went up to 212s for a little while, but didn't hold back down, and has basically been sideways ever since. And again, yesterday we talked about this level at 193.60s. And that's where we rejected at the open yesterday. Like, here's 193.60s, 93. Yesterday at the opening bell, we rejected right here. So until we can break and hold over that level for an extended period of time, you know, I don't know what I'm going to do with Nvidia. We've been day trading it lately, though, and having some success at the opening bell. Maybe we'll do it today, too. Kind of rangy. Again, silver. Again, here's silver right here. So silver, it's slumped over the last few days, but it's back up some now. It's up to almost 80 right now. Silver. So 10 minutes into the opening bell, guys. Let's see what we get. Mega neutral. Today's gonna be a bloodbath. You're A Steve. I'm Steve. You're A Steve. You can never be the Steve. You know. Apple, Airbnb, AMAT. Think you can touch this level of 93.6 today being down so much? I mean, it could. I'm not saying it's going to. I'm not saying it's the most probable thing. It could, though. I mean, you know, it could go up there. If market's really bullish like some people expect, maybe it will. I'm not going to bet on it, though. Not unless I see some really favorable price action to justify it. Who is the Steve? I can give him another cameo here. That's the Steve right there, the bear. That's the greatest of all time above him. That's Steve below him. So, he's cool. Hoping for a meta bounce. How did you buy Nvidia yesterday and sell shortly after without receiving a PDT strike? Because my account's over 25,000. I don't have the PDT. There's no PDT rule for me. My account's large enough to where I don't have the PDT rule. PDT rule specifically if you have less than 25 grand in your account and it's at a margin account. They're getting rid of the rule though, but if you got less than 25K at a margin account, that's where the PDT is there. All right, guys. NASDAQ's still in a range. Yeah, PDT rule is freaking ridiculous. It just lets banks sit on your money longer. They'll never admit it, but that's what it was for. The T3 rule, now it's the T1 rule, but T3 rule, which stands for transaction plus 3 days. Ridiculous rule. It's not even logical. Like, hey, okay, so you can't day trade more than 3 times a week. And when you consider the variance of, like, you need a bunch of trades to see where your edge really is. You're going to tell a new trader that he needs to save up 25 grand and day trade that for his first day trading account? That's freaking stupid. Dumb. It's ridiculous. It's like saying, hey, look, don't learn on a cheap Honda. Instead, when you learn to drive, you got to drive a Rolls Royce. Absolutely ridiculous. Just not even logical. They should be getting rid of it. He probably just watched me trade at the opening bell yesterday. Or the last few days. The rumor is that they're getting rid of it. I don't know when it's going to be regarding the PDT rule. The rumor is that they're getting rid of it, but again, I don't know when it actually is, you know. Yeah, I mean, and you could say, hey, don't, like, only trade 3 times a week. Dude, there's so much variance. Like, you have to get a lot of trades in to see where your edge is, you know? So, like, telling somebody to day trade just 3 times a week because they're new is dumb, you know? Like, just let them, like, if you let them day trade with a $2,000 or $3,000 account, they would have less risk. They'd have more freedom to learn it with less risk. It just makes no sense. The PDT rule never made sense to me. All right, guys. Silver. Will silver break back over $85 an ounce today? What do you guys think? Again, looking at our poll, 64% bullish out of 1,300 votes or so. 64% bullish, 36% bearish today. Does NASDAQ move, then Dow follow? Which one has the greater pull on the other? It's not that either one of them has a greater pull on the other. It's that they're different things. All right, the Dow is less diversified in terms of stock. It's the Dow 30, which means 30 stocks make up the Dow. The NASDAQ is 100 stocks, and it's super tech heavy. So if you want to see where tech's going, you can look at the NASDAQ. If you want to look at a little bit bigger range of sectors, you can look at the Dow, although the Dow still has some tech stocks. It's just less diversified. You want to look at a big range of stocks in general, look at the S&P, which is 500 stocks. So it's not that one has pull over the other. It's just that they're just made up of different things. I like 0 day to expiry options. I can't handle the swings in that market. The options market I was never incredibly good at. I'd rather just buy shares. The option market, you better know it before you trade it. You know, the Greeks, all that stuff, like you better figure out what that stuff is first. It's just a little bit, there's a lot more you got to learn in options. There's worse conditions in options, right? Like that's why I like shares. If you have the money, buying shares is my preference, although you might get more bang for your buck in options. It's just options is more complex than shares. You ever sell options? No, but if you know how to do it correctly, it can be a good income producer. Again, the problem though is that people start selling options and most options expire worthless, right? So the people selling the options, you know, they make money a lot of the time initially. The issue with selling options is that if you get one bad one, you can lose everything. You know, so you better be on your stuff if you're selling options. Is what it is, right? Because if you sell a put option to somebody, or if you sell a call option if you sell a put option and the stock just keeps ripping up, they can rip up an infinite amount, and so you could lose an infinite amount of money theoretically doing it. And so there's just a lot of risks that people don't understand. It's one of those things where you make money, lose everything sometimes. And so it kind of fools people into thinking they're profitable when really they just haven't had, you know, they haven't had the negative variance yet. So, but you can hedge and there's a lot of cool strategies you can do. So if you know how to do it, you can make a ton of money. But it's just not something that I do personally. All right, guys, here we go. 2 minutes. Let's see what we get. Yeah, we'll see if we get volatility. It is Friday. A lot of the time on Friday, markets are flat and choppy. So, people addicted to trading? Of course they are, you know. I think you get a lot of gamblers in trading, and it's important that you either condition that type of thing out of yourself or you just don't trade if you're a gambler. Like I went to the casino recently and played slots, and like just because the people I was with were playing them, it's no fun at all. It's just boring. And they put a bunch of shiny lights on screen and you just kind of slowly give your money away. It just doesn't make sense to me. It's dumb. I didn't like it at all. So I think you gotta I think a lot of good traders have the right personality for it, but it doesn't mean you can't condition yourself to be better. It's just difficult. Anyways, 20 minutes left. 20 minutes. All right, here's the bell. All right, guys, let's see what we get. Here's the opening bell. Hit the live button next to the play button. If it's delayed, put it in 2x speed. There's the bell. 20 seconds is what I meant. All right, so NASDAQ is starting to turn down a little bit here. Now, remember, yesterday, prior to the big drops we saw in the market, ahead of the big drops we saw in the market, we ranged for like 5 minutes plus. So we went sideways, sideways, sideways. When the range finally broke on the downside yesterday, that's when we started to see the downward swing here. But again, opening red candle here on the NASDAQ. Silver's not really moving. Let's check out Nvidia here. Nvidia's down at the opening bell, 185s right now. Look at Nvidia drop. NASDAQ down slightly on this as well. Still too early though. The first 5 minutes I don't trade because it's too wild. All right, again, NASDAQ actually a little green first minute. The doji candle does, so it's kind of undecided. Now a little red. Nvidia's still falling. Sometimes the first move is the wrong move though. Let's see. Memory stocks dumping. Yeah, I see SanDisk down to under 600 a share now. The first candle was technically green on the NASDAQ, but not a lot. And Nvidia, that most heavily weighted stock in the NASDAQ, is down a little bit at the opening bell, slightly red on the day here. But again, we've got some uncertainty at the opening bell, kind of doji candles. See if we make a move in either direction. All right, so we're starting to slow down some of this red action here. Again, the NASDAQ very flat, very flat. I am still seeing tech stocks down some here, rotating out of, and I'm seeing other stocks like Target and other retail. Some of them are increasing here. But very flat opening bell in the NASDAQ here. I gotta wait to trade any of this stuff. It's too early. We're 2 minutes into the open. Nvidia has broken down to 185s. If it gets down to 185s, maybe I'll buy it down there. 185s. Again, NASDAQ still bouncing right off of this 24/7 level here, but memory stocks are down. I might miss this bounce. That's all right. Wait, it's too close to the opening bell. I have to wait for it. Again, give me a follow at Beginner Trades. At Beginner Trades. We cover all this stuff live. Yeah, I missed the bounce. NASDAQ up a little bit now, but it's not a ton. All right, so here's the previous close. The light green line, or the light blue line is the previous closing price. Let's see what Nvidia does here. %64 bullish on the poll. Again, we got a pretty tight opening range here, though, in the NASDAQ, so I'm just waiting for this range to break. I mean, we're slightly bullish since the opening bell, but it's not a crazy amount. It's not enough to say bulls are in deep control right now. Watching Nvidia closely as well. Amazon's breaking down to 260s. Or Apple is breaking down, I mean. Alphabet's okay, it's flat. If Nvidia gets over this previous closing price, VWAP and 200 exponential, which are all very close to each other right here if you look at it. If Nvidia gets over that and stabilizes, I might buy it. Look for kind of a cup and handle like play, but I'm not sure if that's going to happen. Again, NASDAQ, very tight opening range. You can see these three lines we have on our charts right here. Kind of in between those levels for now, waiting for this to break. SanDisk starting to bounce back though. End of February, is it known for being a great market? Yeah, that's probably true. I think, isn't it February one of the months where we average losing month? It's an average losing month. I have to check. All right, NASDAQ testing the 200 EMA, breaking down a little bit here, looking kind of weak. But still in the range. I got to wait for this range to break before I trade it here. Starting to get weaker here, though. I got this 24/7 level on my chart here on the NASDAQ. If you look at it, look at this 24/7 level. So, see if we break and hold underneath that. Interesting. Nasdaq starting to flush a little bit. And here's Nvidia's low of the day right here, 185.40 or so. Still a pretty sideways range though. Bull or bear right now, guys, based off of this choppy open. Looks rangy, to be honest. What, 85 a good level to buy? I don't know. 185 is too close. I was originally thinking about it, but we've now formed a range, and if we get down to 185, we'll be breaking just under that range. And so I don't want the bears to get control right there and me jump in right when the negative momentum hits. It's kind of the logic right now. You know, yesterday we ranged and then started breaking down quickly here, so I'm trying to see if that trend continues. Look, there's the break of the range. Nvidia. Here's 185s. I don't think I'm going to take it. Maybe I should have. $200 exponentials pushing the market down some here, but it's a little rangy. We jumped in a short here. We're up about 100 on the day. I just want to see if we break down more to 700s here. Having a really hard time staying down. Okay. You can see we're up about 160 on the day in futures. We'll see if that continues. Yeah, so here's that negative pressure from the range break on Nvidia. Nvidia just fell down to 184. So this is why I didn't want to buy 185s. I was worried this would happen, where we basically break the range here, and that's right into the negative momentum downside here. That's why I jumped in a short on the futures market. Maybe I should have shorted Nvidia. Nasdaq did break the range here. Nvidia's starting to look weak too. If we get a bounce up to this previous range at 185.40, I'll short that. On Nvidia, but I gotta wait for it. I don't really want to short down here. Hey, later, Sam. Have a good day, bro. Yeah, the market is a little undecided right now. I see some indecision here. All right, here's Nvidia just cracking lows again. It's down to 184s. I just want to buy this one. Not an investment professional. Don't copy me. I'm going to try to buy it. Small size on Nvidia. See if we just liquidity grab back up there. But it's risky. Add to this here. 100. So give it a second. Nasdaq did break down. I'll give it one more second, but I'll probably cut this pretty soon. Too risky. Small loss though, 35 bucks. I'm still green on the day in stocks too. But and we've had some good luck trading Nvidia recently. Negative momentum is just heavy here. Look at the NASDAQ flush. Gold, pump it. Definitely pump it right now. All right, so I just made a bunch of day trading here. Look at this. So we are up. I was up way more. I'm just gonna cut it right there. So we're up 400 on the day trading futures. That's good. Yeah, look at Nvidia. This is tech breaking down. Nvidia down. Amazon's starting to stabilize, but Oracle's down. Meta's down. Alphabet's down. Netflix is almost green though. Meta down. So a lot of big tech is down. SanDisk starting to dump. It's at 595s here. Look at this red showing up here. Honestly, this is a scary market right now, bro. Yesterday we broke down big. Today we broke down big. TLT is moving? Where? Where's TLT moving? Okay, so yields are falling now, even more. I gotta watch Nvidia today, guys. Nvidia is the big story breaking this down. Nvidia's down heavy. 182s already. This was at 190s a few days ago. And again, after yesterday's crazy drop, I definitely don't want to buy this for a longer day trade right now. Steve was right, guys. Steve was right. Gold. Gold under 5K. Silver at 76. Crypto's down to 66s again. Amazon under 200. Yeah, I see it. I bought the dip in Amazon though, but so we're kind of flat on the day. We bought it earlier at 197, so see what happens there. Yeah, Bitcoin flushing with the market here. Bitcoin. This isn't an AI bubble bursting, it's AI working too well. I think it's a little bit of both, to be honest. VIX up 6.5%. Yeah, I mean, with this VIX the last 2 days probably doing okay. Up to over 20s. People are nervous right now. Yeah, I'm just gonna sit tight here. I'm very green in futures today. Definitely fear in markets the last 2 days, really. So fear has been kind of getting people. All right, NASDAQ's starting to fight its way back up though here. Again, the problem is here's the 200 exponential. All right, I will try to short here on Nvidia. There's 100 shares. We'll maybe add to like 150 to 2. All right, there's 200 shares of Nvidia. This is all small trades though. NASDAQ at the 200 exponential. There we go. Liquidated some of it. I'm gonna lower my size here. Keep 50 and try to let 50 work a little bit. See if the NASDAQ rejects. About flat on the trade overall. We took some into the profit, but it bounced pretty heavy here. So. Nasdaq looks like it's climbing back up, though, to be honest. We'll let this level test, and then we'll get out if it doesn't work. I'd add some size back here. We're at the VWAP here for Nvidia. Size. Give it a second. Yeah, Nvidia has the ability to just markets here. Yeah, we're gonna have to start covering. It's just up too much. We're down like $100 on this, so it's pretty small, all things considered. Nasdaq's starting to come down though, but Nvidia's still looking okay. Yeah, just too strong here for Nvidia. I'll hold 75. Here's the previous closing price. So again, the Nasdaq tried to actually go green on the day. Yeah, are we going to come back down and go green on the day, guys? That's the question here. Nasdaq looks like it wants to. Yeah, I'm looking at Nvidia. It's holding the volume weighted average price fairly well here. Again, luckily we're up about 400 in futures. Down about 130 in stocks. Day trading. I'm just gonna get out here. Video go green. Yeah, Bitcoin back up to almost 68,000. Look at Bitcoin, guys. If there's news, I don't think there is, but no, not really any news to justify it. Op is down. Bulls got control. Steve was wrong, guys. Bulls are in control right now. Yeah, I probably shouldn't have tried this second Nvidia trade. I just wanted to see, like, look, a trend continuation would have been this. You know? And so I was just seeing if we got a trend continuation. But honestly, Amazon is ripping up. So actually, I'm still somehow green in stocks. I don't know how I'm green. Amazon helping me out. PayPal helping me out as well. Oracle helping me out. Nike helping me out. Microsoft helping me out. So I'm actually still green in stocks. There I was. Kind of flat, but. Silver. Silver back up to 78. Swings today in markets, though, guys. Yeah, I'm in SoFi as well. Does this trend hold? On a split down the middle now. Again, give me a follow at Beginner Trades, guys. At Beginner Trades. There's the link. Give me a follow. We post a lot of the economic reports there too. Yeah, we've got some V-shaped moves. It's still early though on Nvidia. Maybe I should have held that short. I'm just getting faked out left and right here. Looks like we might get a trend continuation anyway. Nasdaq's starting to turn back down here. a little bit off of my Amazon and Microsoft trades. What is BRO's coffee, right? Or something? Dutch Bros? Yeah. Microsoft ripping it was. It's now pulling back. A lot of tech starting to come back down here. You can see how NASDAQ and Nvidia move so similar. Again, Nvidia is the most heavily weighted stock in the NASDAQ. Yeah, futures trading has been going really well, though. I mean, look, here's my futures trades recently here. Mostly trading micros, too, here. I don't really like mini contracts. I like micros a little bit better, but... And on the week, we're up about 1,500, which is good. Today, we're up about 4. If we keep that trend up. Look at this breakdown. So again, we're coming back down, swinging back and forth here. Getting seasick? Yeah, I get it, guys. Y'all be careful. Again, I'm kind of hands off. I've made enough in futures to where, like, I'm green. I don't want to risk too much, but I also want to see if the market starts dumping here. Again, Nvidia swings have been wild too. Again, Nvidia was at 193 yesterday morning. Now at 183. It's dropped, you know, dropped over 5%. Y'all red or green today? I'm green net, but I'm red in stocks for sure now. $50-55K. Yeah, I mean, again, I longed Nvidia here, and then it broke down too much. I got out, and then it ripped up, and then I shorted Nvidia here, and then it pushed up so much, so I got out, and then it broke down. So again, some days are just not your days. That's how it goes, you know. Some days are just not your days in markets, and some days, the more you keep pushing, the worse it gets. And so I'm probably hands off with day trading stocks right now. I got a big cushion in futures. Maybe I could take some swings there, but again, y'all be careful. Y'all be careful. Yeah, what I see breaking down right now, Microsoft's actually green on the day. Amazon's green since the opening bell. The breakdowns are mostly in chip stocks. MU is down. AMD's actually green on the day, though. Nvidia's red, though. A lot of this is Nvidia related. Netflix is actually green on the day, too, though. Yeah, I don't know if my trades were gambling necessarily. I think there's always variance, right? And you got to understand variance. I think I got in short. I got in long here or around here. So my long thesis was correct here. It just was early. It was just early. And the pressure started showing, and risk management, I cut it. And then I think my trend continuation trade here made sense as well. But again, we just kind of whipped up too much. Looked like we're going to start moving like this. And I don't want to get stuck in that train rolling. So I got out as well. Whether it's a gamble, I mean, look. When you lose money, it looks like a gamble. When you win money, you look like a genius. So that's how it goes. I'm green on the day. Like I said, in futures, I'm up. What am I up in futures? I'm up $393. So I will take it. Green is good there. Well, a drop in 10-year yields is probably what you mean in regarding pricing in another cut this year. We have seen yields go down. They're now at 4.06%, and yields and interest rates follow each other. So again, yields are down today. Weaker few days of market action, and then low inflation data opening the door for potentially more cuts this year is making yields fall. Nasdaq's getting close to that, or Nvidia's getting close to the low of the day here at 182.25 or 26. Nasdaq's starting to fall down a little bit on this news as well. Is HIMS up? I'm in HIMS right now. I think I'm still. Yeah, HIMS is up slightly. It's down so much though. It depends on your definition of gambling. If your definition of gambling is risking money without known outcomes, then a lot of stuff's gambling. If your definition of risk of gambling is risking money without good odds, with bad odds, then it depends on who you are, what you're doing, how you're trading, what your stats look like. So. Easiest way to make money in markets is just dollar cost average or value invest long term. Sit on good companies long term. You're almost guaranteed to make money. Diversify, protect, and sit. Buy indexes. Again, I'm not an investment professional. This is not investment advice. This is pretty known stuff. Easiest way to make money is buy things, sit on them long term. You know, diversify into different assets, sectors, and sit long term, and you're almost guaranteed money. I don't know, man. I might actually sell HIMS right now. I'm in only a small position on HIMS, but I am not really liking it. Novo's going after them. Actually, you know what? I'm going to cut HIMS. I'm going to cut my HIMS trade. Novo's going after them for selling what they consider knockoff weight loss drugs. Novo's a big company. Yeah, again, we're getting close to the lows here, and Nvidia and Nasdaq's pushing towards them as well here. Let's see if it holds down. Depends on how big of a break this is and some stuff, though. Yeah, I had like a few shares of HIMS. It was small. But I had been holding them for a while, and so I lost money. And even if it rebounds back, it's just such a long road up. I don't think it's worth it to just sit on it. Money markets price in a 40% chance of an ECB cut by December from around 30% before. Again, Bitcoin 60K level is also seen as a liquidity trigger. Where's Alibaba today? Alibaba. It actually filled most of the gap back up here. Again, the Dow is down 1,500 points, 24 hours here. Here's the Dow. Kind of bounced back up though, but it's under 50. The bubbles popped. Baby. Get target. Slightly green on the day. We're having a hard time like fully breaking down though. Every time it gets weak, we rebound a little bit. But Nvidia is looking really weak. Kind of uncertain though here what we're gonna get. Me watching this market is like watching Napoleon Dynamite. Great movie. I hated it when I was younger. As an adult, spent some time in the Midwest. I can appreciate it now. You know? I hated it when I was young. Too boring for me, but I'm like the Uncle Rico of trading, so of course I gotta like it now, you know. Every school has a kid like Napoleon, and if you don't know the kid like Napoleon, you are the kid like Napoleon. Alright guys, Nvidia back up a little bit, still looking weak. I'm wondering if we're going to start breaking down now though. It looks weak obviously. Lower highs. See what the NASDAQ does though. The NASDAQ's being a little bit more resilient than Nvidia is. Again, Apple's red. Meta's trying to fight back, but it's still red on the day. Microsoft's slightly green on the day. Amazon's red on the day as well. Good eye on gold. Yeah, I mean, I'm watching gold and silver here. And gold's over 5,000, but they're not really moving a lot. Silver's trying to get back up as well. They had some big breakdowns from CPI, but they didn't really hold down. AMD's kind of flat. All right, guys, again, Nvidia. Still weak. NASDAQ is starting to chop here. And it's 10:05 p.m. Or 10:05 a.m. now. Market time. A little boring here, guys. A little boring. Treasury Department issues Venezuela-related general license. Anthropic is also adding new board members as its eyes in IPO, according to the Wall Street Journal. Yeah, Bitcoin, crypto. Get a little strength here, though, versus some other stuff now. But I am probably going to cut out of here. Guys, I'm probably going to cut out of here in a second. Again, let me know what you guys think we're going to get next week. Will next week be a bullish or bearish week in markets, guys? Bullish or bearish week in markets? I don't know. I don't know. We'll see. We'll see. Let me know what you guys think. Yeah, no, I'm gonna get out of here. Hold on, sorry, I had to schedule Tuesday stream. Yeah, market is closed. Stock market's closed Monday. Futures market's open, but the bond market's closed, so it's kind of it's almost certainly gonna be a quiet day. So you know, I don't know how much craziness we're really gonna get here Monday, so I'll probably just sit down and come back, swing it on Tuesday. Y'all have a great long weekend though. Gonna take all day. You know, this is my end of the day reminder. Remember, guys, I guess CPI exactly right. You know, I'm just gonna remind everybody of that in case you guys forgot it. The other 8 times I reminded you today that I did guess CPI exactly right. I said 2.4%. We showed up at 2.4%. I'm not saying I'm a genius, but you're welcome. All right, you're welcome, guys. I'll see you guys Tuesday. Have a great day. Here's to you guys. Again, as soon as I close the stream, it'll bring you to the Tuesday stream. Y'all better never forget it. Y'all better never forget it. I'll remind you if you do. No, I'm sarcastic though, guys. Obviously. But yeah, y'all have a great long weekend. Be safe. This market's a little flat and choppy now, but it doesn't mean anything yet. It's been about 40 minutes since the market opened, so again, we'll see what happens. Y'all be safe. Have a great day.